Good morning, ladies and gentlemen. My name is Katherine Livingston and I'm Chairman of the Bank's Board. On behalf of my fellow directors, it is my pleasure to welcome you to the 2017 Annual General Meeting of the Commonwealth Bank. I also welcome shareholders and others joining online. I would like to acknowledge the traditional owners of the land on which we meet, the Gadigal people of the Eora Nation, and acknowledge their elders both past and present. Safety is viewed as a high priority at the bank, so I'll briefly outline the venue's safety procedures. If an emergency occurs, I will adjourn the meeting and ask everyone to walk towards the exit signs. Please follow all directions from the Convention Centre staff and listen for further instructions via the public address system. Now, would you kindly switch off your mobile phone or put it on silent during the meeting? And in accordance with normal procedures, please don't take photographs, film or record the meeting. We have a quorum and I declare the meeting open. A notice of meeting has been distributed and I will take it as read. I would now like to introduce your board, the Chief Financial Officer and the Company Secretary. So from my far right, Rob Whitfield, Andrew Mole, Lorna Inman, Harrison Young, Brian Long, Chairman of the Audit Committee, Taryn Morton, Company Secretary, Ian Narev, Chief Executive Officer, Rob Jasudison, Chief Financial Officer, Wendy Stops, David Higgins, Chairman of the Remuneration Committee, Mary Padbury, good morning, and Sharish Apt, Chairman of the Risk Committee. Also with us today are members of the bank's senior management team, and they will be available to speak with you after the meeting along with directors. Mr. Marcus Laithwaite from our auditor, PwC, is in attendance today, and he'll be available to respond to any specific questions you may have on the conduct of the audit. PwC's written responses to questions which were received prior to the meeting and directed to the auditor are available from the share registry desk in the foyer and from the Company Secretary on request. The agenda for today's meeting is as follows. First, I will comment on a number of important matters. Ian Narev will then speak, and after Ian's address, we will proceed to the formal items of business as set out in the notice of meeting. Ladies and gentlemen, it's a great privilege to stand before you today as Chairman of the Commonwealth Bank. At today's annual general meeting, we can reflect on your bank's many excellent achievements during the 2017 year. Central to this was the progress on our vision of securing and enhancing the financial well-being of people, businesses and communities, and on delivering solid financial performance and returns for shareholders. The bank's net profit rose to $9.9 billion, and this strength of earnings enabled the board to announce an increased total dividend of $4.29 for the 2017 financial year. However, our progress and performance have been overshadowed by a range of reputational and regulatory matters which have impacted the bank. Those matters have generated adverse perceptions of the Commonwealth Bank's culture and trustworthiness, qualities which are vital for its ongoing success. So today, I would like to begin by providing you with an update on how the bank is dealing with the major issues it is confronting, and I will then move to matters of governance and performance and close with a comment about the future. As you know, Australia's anti-money laundering and counter-terrorism financing regulator, AUSTRAC, commenced federal court proceedings against the bank on the 3rd of August in relation to alleged breaches of the Anti-Money Laundering and Counter-Terrorism Financing Act. Shortly afterwards, ASIC launched an investigation into whether the bank should have disclosed more information to the market about the AUSTRAC matter before the legal claim was lodged. Subsequently, a plaintiff law firm launched a class action against the bank, essentially based on a premise that the bank had not disclosed information about the AUSTRAC matter sooner. We will be as transparent as possible about these matters, but I hope you will understand that while legal proceedings are on foot, there are limits to what I can say today. What I can tell you is as follows. These allegations and legal proceedings are very serious, and the board is treating them with the gravity they warrant. A special board committee has been established and has oversight of the preparation of the bank's response to AUSTRAC's allegations. This response is required to be lodged with the court by the 15th of December and will be made public. The Board Committee also has oversight of the continuing programme of action, which is focused on ensuring that the bank complies with AUSTRAC's current and evolving regulations. This programme of action has been underway since 2015, when we first became aware of compliance deficiencies in relation to the monitoring and reporting of certain transactions conducted through our intelligent deposit machines. If, as part of its work, the Committee finds that further action on accountability is required for parts of the organisation or individuals, that will also be addressed as a priority and will be transparent regarding those outcomes. In relation to ASIC's investigation, we are in the process of responding to its request for information. And in relation to the class action, we intend to defend it vigorously. Based on what we knew in 2015 and subsequently, the Board believes the bank has met its continuous disclosure obligations. The bank was not aware that AUSTRAC had decided to launch legal action until the civil proceedings were filed on the 3rd of August. Further, AUSTRAC's statement of claim filed on that day included matters of which the bank had no prior knowledge. It is also important to stress that there is no suggestion in AUSTRAC's statement of claim that anyone at the bank knowingly contributed to the matters that have been identified, nor that there has been misconduct on the part of bank employees. Nonetheless, it is clear that the bank was deficient in aspects of its compliance with AUSTRAC's regulations, and it is equally clear that this has damaged our reputation with customers, shareholders, regulators, and government. As Chairman, and on behalf of the Board, I apologise sincerely for this deficiency and its consequence. But shareholders, I can assure you that these concerns command the highest priority of the Board, and we are determined to ensure that our risk management systems, including regulatory compliance, are of the high standard which is expected of us, and that we rebuild trust in the bank. Turning now to the independent Prudential inquiry announced by APRA on the 28th of August. This inquiry will review the bank's accountability, governance and culture frameworks and practices. It will assess the changes we already have, both in place and underway, and recommend further improvements as necessary. APRA's report will be made public and will have the independence and transparency needed to reassure all our stakeholders that where further action is required, it will be implemented by the bank. We welcome this review and are cooperating fully. The APRA inquiry panel has already commenced its detailed work, with a progress report due at the end of January 2018 and a final report at the end of April. Turning now to governance matters, and let me first address CEO succession. As shareholders would expect, the Board and our CEO have had ongoing discussions throughout his tenure about the right timing for CEO succession. After 6 years in the role, and given Ian's plan to retire within a year, the Board felt it appropriate in August to announce the planned succession of the CEO by 30 June 2018. In the meantime, Ian remains deeply engaged in his role. However, as this is Ian's last AGM, we thank him for his unwavering commitment to the bank. His integrity and service will leave a strong legacy for the future. A global search for Ian's replacement is well advanced, and we are considering internal candidates and external candidates from Australia and offshore. In line with good corporate governance, there also continues to be well-planned renewal of the Board. Over the past 12 months, 4 directors have retired from the Board, including Lorna Inman and Harrison Young, 2 long-standing directors who are retiring today. On behalf of the Board, I would like to thank them very much for their 6 and 10 years of service, respectively. Andrew Mole, who has been a director since 2008 and would also have retired today in line with tenure guidelines, has agreed to serve a further year in order that the Board might benefit from his valuable experience as the bank implements the transition of its life insurance business. This sale should be completed within the 2018 calendar year. If elected today, Andrew will serve 1 more year on the Board and will retire at next year's AGM. Rob Whitfield was appointed to the Board in September and is offering himself for election today. Rob has extensive experience in banking, including deep risk management skills, and we're delighted that he's agreed to join the Board. Board renewal, of course, is an ongoing process, and we expect to make further appointments during next year. Turning now to remuneration. At last year's AGM, it was clear that shareholders had significant concerns with the remuneration framework proposed for the 2017 financial year. As a result, and after detailed consultation with shareholders and stakeholder groups, the 2018 Remuneration Framework incorporates many changes, including to the way in which performance is measured in relation to short and long-term variable remuneration and the applicable deferral period and terms. The Board has also made it clear that, when necessary, it will exercise significant discretion to reduce or cancel variable remuneration. Given the reputational damage that occurred this year, the Board reduced short-term variable remuneration to zero for key management personnel and significantly reduced deferred short and long-term variable remuneration for certain former executives. The directors also reduced their own remuneration through a cut equivalent to 20% of 2017 directors' fees. The nature of the changes made and discretion exercised is described in more detail in the Remuneration Report, which has been distributed to shareholders as part of our annual report and will be considered under Resolution 3 in today's meeting. We have also spent time over the past year evolving our response to the challenge of climate change, which represents not only a business risk, as we have laid out in our annual report, but also a responsibility, as we have described in both our annual and corporate responsibility reports. We engage with a broad range of stakeholders and acknowledge the concerns some have raised regarding the role banks play in supporting the fossil fuel industry, in particular the coal industry. Shareholders should note that our coal funding is comparatively small and has been trending down for some time. We expect that trend to continue over time as we help finance the transition to a low-carbon economy. This is the foundation for our 2017 Climate Policy Position Statement, which sets out our commitment to playing our part in contributing to the Paris Agreement objective of limiting climate change to well below 2 degrees and supporting the global transition to net zero emissions by 2050. Our policy will be evolved when the outcome of the climate scenario analysis currently underway becomes available. Again, we will be discussing this question in more detail when we come to Resolution 5 in today's meeting. As well as the changes in the board, management, remuneration, risk management and accountability, major change and transformation is occurring right across the bank in ways that directly benefit customers. In September, the Commonwealth Bank cut ATM withdrawal fees, a move that was quickly followed by other major banks. We have also revised branch staff remuneration plans to put customer service first. Ian will cover these measures and other initiatives in more detail as part of his remarks. The common theme of these changes is that banking should be easier, more convenient, secure, and available at lower cost. And through this, we will work to enhance the financial well-being of customers, which is what the Commonwealth Bank is committed to delivering. Lastly, turning to the performance of the bank and the future. As I said at the outset, our 2017 financial performance was very sound, with cash profit up over 4% to $9.9 billion, a return on equity of 16%, and stronger capital and funding, all allowing us to increase your dividend by 9 cents to $4.29 per share, which meant a total return of $7.4 billion to you during the year. That's 3 out of every $4 of the bank's profit was paid to shareholders. We also paid $3.9 billion in tax. The financial performance of the past year and improvements in products and services to customers are 2 measures of success. But we need to achieve these outcomes in ways that also reflect the values of the bank. In this context, our stakeholders extend to the wider community, legislators and regulators, and they too expect the bank to act with integrity and for the bank to be held accountable for how it conducts itself. I am therefore personally committed to ensuring that we deal openly with the problems of the past, resolve those issues in the best interest of stakeholders, and focus on executing our strategy in the face of a rapidly changing competitive, regulatory and technology environment. I know that all my colleagues on your board are similarly committed. In the relatively short time I've served on the board of CBA, I've been struck by the highly evident and tangible pride our staff have in the bank and the work they do. As we meet today, we are already well into the 2018 financial year. Our first quarter result was pleasing, and right across the Commonwealth Bank, our people are working very hard to create a better, stronger bank, which focuses intently on our customers' needs for their financial well-being, leads on operational standards and compliance, and contributes to communities and the economy in a manner consistent with our size and heritage as one of Australia's most significant companies. In closing, I would really like to express my thanks to people in several capacities. To our customers for letting us serve them every day, and every day we try to do a better job. To our people for the extraordinary effort they put in, and particularly all the hard work in the last few months. And to you, our shareholders, for supporting us in these challenging times. It's an honour to be chair of your board and to have the opportunity to work with my board and management colleagues to guide the bank at this vital time. Thank you very much. So, I will now ask our CEO, Ian Narev, to address the meeting. Thanks, Ian.
Thank you, Chair, and good morning, fellow shareholders. Several weeks ago, I had the pleasure of speaking at Morningstar's investor conference, and in the room were several hundred investors. They were not the fund managers whom we normally speak to after each results announcement. They were retail investors, mums and dads, not CBA-specific investors, but everyday Australians who invest in Australian shares. As I was introduced, the MC asked audience members to put up their hands if they had held Commonwealth Bank shares since the float. And even though this was a room of general investors, not specifically CBA investors, hands shot up. They were representative of the almost 800,000 retail shareholders who directly own more than half of your bank and whose investment in Commonwealth Bank is worth approximately $70 billion. When combined with Australian families who own Commonwealth Bank shares through their super or their investment funds, the value of Australians' holdings in your bank rises to over $110 billion. For those in that room or in this room who bought the minimum holding of CBA shares at the time of the 1991 float, 400 shares, and reinvested dividends every year since, that initial investment of $2,160 is now worth around $142,000, or around $162,000 including franking credits. Long-term value creation is the key to responsible and effective stewardship of a large institution. And perhaps the most fundamental underpinning of Commonwealth Bank's strategy over the last decade has been one very simple premise. If customers are more satisfied, they will trust us to meet more of their needs. And that will in turn lead to good outcomes for you, our shareholders. And again, customer satisfaction requires a long-term view. At a function last week, one of our customers, Peter, told me he had recently brought into one of our branches a transaction record that showed an initial £1 deposit that his father had made in Peter's account in 1933, and he's been a customer ever since. A few weeks prior to that, Adam Bennett, our head of business and private banking, met with senior executives at G. James Glass and Aluminium in Queensland. This private company was celebrating 100 years in business. Commonwealth Bank has been its banker since day one. These are the sorts of customer relationships a bank is built on. So a consistent theme of our performance over the last 10 years has been our willingness to invest continuously in our people and in our systems to enhance the customer experience. 10 years ago at our AGM here in Sydney, my predecessor, Ralph Norris, noted that CBA's retail customer satisfaction was up 5.6% to the bank's best rating in 10 years. At the time he spoke, CBA's retail customer satisfaction was 70.5% and fourth out of the four major banks. As at the end of the 2017 financial year, based on the same survey, that rating was 82.7%, the best of the four major banks. It had been first or first equal for 11 of the 12 months of that year, and indeed for over 80% of the time since we first captured the number one position in 2013. And it's no coincidence that over the same 10 years since Ralph's comments, our annual return to you has been 9.1% per year, and the next closest major bank is 7.7%. We are, I think, justifiably proud of the progress we've made in overall customer satisfaction, but at the same time, we've learned a very important lesson. Even as customers overall are highly satisfied, we must pay more attention to the experience of those who are not, those whose experience with the Commonwealth Bank has been poor. Our reason for being is safeguarding people's life savings, extending loans to build or buy houses and businesses, and helping people insure their lives and assets. The products and services that we provide are fundamental to people's well-being. So when we get it wrong, we cause significant distress. When we do, it's of no comfort to the affected customers that they are in a minority, that the experience of the vast majority of others has been good. What they care about, rightly and understandably, is their own experience. At times in our dealings with these customers, we've listened poorly and we've been too bureaucratic. As Chief Executive, I take responsibility for that. And I apologise for the distress we've caused those customers. And so we've also taken wide-ranging, decisive action. Our Open Advice Review program went back over a decade, involved the review of more than 1 million customer files, and resulted in the payment of nearly $35 million to financial advice customers. We backdated our new heart attack definition in our insurance policies to 2012, which resulted in us paying 33 customers more than $4 million. We've revised remuneration for our frontline staff. We've adopted new whistleblower policies and processes. We've introduced a new customer advocate function, and there is more to do. Our efforts in this area will continue. Likewise, we need to be more diligent about some of our policies and processes. Over recent years, and particularly during and since the global financial crisis, we've managed risks arising from our lending, funding, and markets activities very effectively. Our performance has been up there with the best banks in the world on these dimensions, though of course we will never take that for granted. But the same cannot be said of how we've managed some of our operational risks. When we measure credit and market risk, we expect and allow for losses. The test is the quality of the overall portfolio, not necessarily the weakest link. Operational risks must be managed differently. And there are parallels here with my previous point relating to customer satisfaction. We will often be judged by our areas of weakness, not by overall performance. We need to accept that and to adapt. As our chairman has said, in the case of our financial crimes controls, it was clear we did not reach the standards we should have. We let people down. We've apologised, we've taken accountability, we're addressing the weaknesses, and equally importantly, we're making sure we learn from our mistakes. As we work hard to strengthen trust, you can be assured that we are also acutely aware of the need to maintain the long-term momentum that we've achieved. Beyond the obvious challenges, the 2018 financial year has already been a time of ongoing value creation. We announced the sales of our life insurance operations in Australia and New Zealand, the largest transaction in Australian financial services since 2010. As the Chair said, we led the industry in cutting ATM fees. We've continued to make a range of enhancements to our products and services to help our customers take greater control of their finances. We've reaffirmed our long-standing commitment to keep our call centres in Australia. We've launched our Domestic and Family Violence Emergency Assistance Package in partnership with Telstra, which provides immediate support to any Commonwealth Bank customer experiencing domestic and family violence, and which 500 customers have accessed in the first month. And last week's announcement of our financial results for the first quarter of the current financial year provides tangible proof that our business remains focused and continues to deliver well for our customers and for our shareholders. I've got a bit of time to go as Chief Executive, and I'm determined to give of my best until the last minute of the last day of the job. But since this will be my final AGM, I wanted to take this opportunity to thank all of you, our owners, for continuing to invest your hard-earned savings in the Commonwealth Bank. It has been and it remains a privilege to work for you. When I do leave, it will be with a combination of pride in what we've achieved for you and sadness for where we've disappointed you. To conclude, I also want to acknowledge in your presence the bank's people. At our awards night in this building last week for our people who have displayed exceptional values, I mentioned that during my 6 years in this role, the most inspirational people I have met are Commonwealth Bank people. At that dinner, the 2 award nominees on my right, George and Cheryl, had a combined 76 years' experience in the Commonwealth Bank between the 2 of them. They're now running our Credit Academy, passing on their experience to their more junior colleagues. They certainly understand the long term. You can be sure that they and their 50,000 colleagues will continue to work hard for our customers and work hard for you. Thank you.
Thank you very much, Ian. Now, before addressing the formal items of business and inviting questions, I will outline the meeting procedures. When registering your attendance today, you would have received a card. You need your card to ask a question or to re-enter the meeting. Pink cards are for shareholders and proxy holders who may speak and vote. Purple cards are for shareholders who may speak but not vote. All other persons are welcome to attend but may not address the meeting or otherwise participate. I will introduce each item of business separately and then invite questions. I will ask shareholders and proxy holders who wish to speak to move to the closest microphone located in this room. Please show your pink or purple card and identify yourself to the microphone attendant who will introduce you. If you are not here in your personal capacity, please identify the shareholder you are representing. To ensure that all shareholders and proxy holders have an opportunity to speak today, I will take one comment or question at a time and ask that you make your comments and questions as concise as possible. I also ask that questions be confined to the business of the meeting. If you have a customer question, please speak to one of our customer representatives who are outside in the foyer area. If your question relates to a particular item of business, please ask your question when we come to that item. I would also ask that you are respectful of others during the meeting to ensure that we can have a constructive discussion on all matters. Following discussion on each item, valid direct and proxy votes received will be displayed on the screen, and I will then ask you to vote on that item. Voting on all items will be conducted by way of a poll, which I now open. If you wish to leave the meeting early, you may complete your pink voting card and place it in one of the ballot boxes as you leave. The ballot boxes are all located near the exits and are attended by representatives of Link Market Services, the bank's share registry. Link Market Services will count the votes, and Mr. Matthew Lunn of PwC will act as observer for the poll. As the results of the poll will not be available before the meeting closes, they will be released on the ASX and on our website later today. A light lunch will be available from midday, but to avoid disrupting the meeting, I'd ask that all refreshments be taken in the foyer area, and I will not be adjourning the meeting for lunch. There are 5 items of formal business in our meeting today. The first is discussion of the 2017 financial statements and reports. Second is the re-election and election of directors. Third is the adoption of the Remuneration Report. 4 is a conditional spill resolution, which depends on the outcome of item 3. And the 5th is the amendment to the bank's constitution. I understand that shareholders will have very specific interest in remuneration and climate change, and therefore ask that you hold your questions in relation to these two topics until we come to that item as part of the business of the meeting. We will now move to the first formal item on the agenda, which is to discuss the financial report, the Director's report, and the Auditor's report for the year ended 30 June 2017. While there is no resolution for this item, shareholders have an opportunity to ask questions on the reports and the management and operations of the bank generally, and also the conduct of the audit. I now invite shareholders and proxy holders to move to a microphone to ask any questions or make any comments. There's a light that's shining at the top. Microphone 2, please.
Good morning, fellow.
Good morning, Chairman. I'd like to introduce Mr. Philip Kelvin, a shareholder.
Good morning, fellow shareholders, Chairman, members of the board. My name's Philip Kelvin. Before I retired, I was the Executive General Manager Operations for the Sydney Futures Exchange and the Executive responsible for merging the SFE and ASX back in 2006. And I currently hold about $500,000 worth of stock. A bit of context. About 10 years ago, the world was in the middle of the GFC, and I see Ian has touched on that. But in the intervening years, a number of things have happened. Cash rates fell from 7.25% to 1.5%, and they've been there for about the last 2 years. Net interest margins of the banks got crushed, and profitability is really only underpinned by housing lending. And thirdly, the central banks from around the world undertook quantitative easing that now stands at about 19 trillion, and they're now talking about being in the process of unwinding that, with some very disturbing consequences for interest rate movements and financial dislocation. However, over the last 3 years, that interest rates have basically been at historic lows, never before seen rates of 1.5%. There's been no share price growth in this bank, and dividends, cash dividends, have actually barely kept in line with inflation. So you can probably guess I'm not that happy. However, there's also something else going on. It started in 2006, and with the proactive compliance by the bank with the Energy Efficiencies Opportunities Act 2006. Now, basically what we had in the middle of the global financial crisis, the single biggest meltdown in the real world since the Great Depression, and possibly on the financial side, to sign up to of social justice frameworks, so that over the next 3 years they adopted things like UN Principles of Responsible Investing, which turned out to be the basis for their ESG framework. Secondly, the World Business Council for Sustainable Development. Thirdly, Equator Principles. Fourthly, National Greenhouse and Energy Reporting Scheme. Fifth, carbon disclosure. And if you go and have a look at the website, the list has gotten a lot longer, and the depth and breadth of these frameworks has exploded. Now, if you take the UN frameworks, these are essentially designed to modify the behaviour of the bank's employees, suppliers, customers, and I'll guarantee will have had required very significant resources to implement, operationalise and maintain.
Mr. Kelvin, I think if you could come to your point.
I'm getting there very quickly.
You've nearly had 10 minutes at the microphone, so I think if you could ask your question.
Well, sorry?
Could you ask your question now, please?
Well, what I'm saying is that there was a disproportionate level of attention given to non-financial indicators. All right, and this actually permeated through the last annual report and is still evident in this annual report and remuneration policy. And I consider this to be far more in the way of social engineering than attempting to drive outstanding returns to shareholders.
Thank you. I will take that as your question now.
No,
So
I have one request, and it's for the bank not to commit to expanding in whole or in part any more third-party frameworks without first returning to shareholders with a summary of those frameworks and how they have actually contributed to shareholder returns.
Thank you.
Thank you.
Thank you, Mr. Galvin, for your question. So first of all, can I come to our focus on financial returns? And I think you would have seen from our most recent results and our first quarter result that we're very focused on financial returns and have delivered in terms of additional profit over the period, and our cumulative total shareholder returns over a longer period are over 10% per annum. So I can absolutely assure you that making sure that we run the bank responsibly from a financial return point of view is absolutely paramount. However, having said that, we also, as a very large organisation, understand that we have a broad social responsibility and also that we need to meet community expectations. Some of the elements of the requirements that you've noted in terms of the Energy Efficiency Act and NGER are regulations to which we must comply. They are government regulations. But more broadly, in terms of our responsibility to the environment, to good social practice, including requirements around modern slavery, we take these responsibilities very seriously. It's not enough just to earn profit. You have to earn profit in a responsible way, and we take that responsibility as something that we must address at all times. Thank you. Could I now go to microphone 1?
Good morning, Chairman. May I introduce Mr. Philip Johnston, a shareholder?
Philip Johnston, I worked for Commonwealth Bank for 37 years. My question relates to remuneration. I wasn't sure if this is the appropriate time. It's a lot shorter, I'll just read it quickly. As an ordinary shareholder, I posted a written question for the Chairman in the provided reply post envelope 4 days prior to the cut-off date of Thursday, 9 November, for receipt of written questions. My written question asked the Board of the Commonwealth Bank to provide a table in all future annual reports to shareholders which lists the total remuneration received by the CEO and the Chairman of the Board, as well as the median branch employee's salary for the previous 20 financial years, together with listing movements in the CPI and the average remuneration of an employee in the financial services sector. That's a table of 20 years' rem for the CEO, the Chairman of the Board, the average employee, and data dragged out of the ABS. Will the Chairman now inform the ordinary shareholders and the financial journalists present if the Board will implement the 4 questions in my written question letter to you dated 5 November, namely for inclusion of a 20 years remuneration table and to cap future CEO total remuneration to 100 times the average remuneration of employees in the financial services sector?
Thank you, Mr. Johnston. We have received your letter, and I should say that we had over 600 letters in advance from shareholders with questions. So thank you very much to those who submitted those questions and took the time to be in touch with us. In terms of our remuneration, we do, and our policy is to make sure that we're paying people in line with the market, and we look at all of the market indicators, and in fact we pay people at or above the market level. So I think we have confidence in our remuneration frameworks and that we are paying people appropriately and fairly at all levels, and that is by reference to the market. Thank you. Microphone 3, please.
Good morning, Chairman. May I introduce Mr. Colin Ryan, a shareholder?
Yes, Colin Ryan. I've been a shareholder for the last 14 years since my retirement. My question is to you, Katherine. Although many states have already announced partial or total environmental bans on unconventional gas bands, Santos still has plans to frack in the Pilliga State Forest, in the Liverpool Plains and underneath the Great Artesian Basin, and against heavy community opposition. Around the world, banks have adopted bans on unconventional oil and gas projects. My question is, does our company believe that the regulatory, environmental and financial risk that unconventional oil and gas poses is worth it?
Thank you, Mr. Ryan. I think, as I've said, we'll be discussing climate matters when we come to Resolution 5, but in response to your question, I think as we've outlined in our climate policy position statement, we are undertaking scenario analysis in relation to climate change, and that will include the factors that you have spoken about. And when we have the results of that analysis, we will look at evolving our climate policy position. Thank you. Microphone 1, please.
Excuse me, can you ask somebody to dim these lights at the front? Because it's very uncomfortable for a lot of people in this room.
All right, we'll do that. Thank you.
Chairman, may I introduce Ms. Natasha Lee, a shareholder?
Thank you, Madam Chairman and the board. My question concerns provisions for impairment. I note that the home loan provision has increased from 193 million to 249 million. What are the underlying assumptions which that provision was based on? Are you assuming an interest rate increase in the future, or is that on current interest rates?
So thank you very much for that question. The calculation of our provisions is a very complex exercise that goes into quite detailed factors in relation to individual loan types. So there's no one assumption there. And in fact, we look at the capacity generally of people to repay their loans, and that depends on geography and the type of loans that they have. But I might ask our Chief Executive to...
Thank you for the question, Ms. Lee. When we look at our provisions, we are primarily taking a view on the quality of the credit that we have on the balance sheet at the time that we are taking the provisions in the economic circumstances that we're in. That's what the accounting standard requires us to do. There are going to be some changes to that over coming years, but that's broadly the context in which we make the provisions. What I can tell you, though, is when we are making our business settings, thinking about our credit standards, thinking about our capital position, our liquidity positions, etc., the board and the management are engaged in active debate about the economic outlook, and we make sure that we take a reasonably conservative position based on what we can see. Our view generally on the Australian economy at the moment is overall it seems to be doing okay. We know that there are pockets of our customers doing it quite tough. The dynamics in the economy overall are reasonably positive, but we will continue to watch that very cautiously.
Thank you.
If I can indulge with another quick question. I note that the return on equity and your efficiency ratios have, over a period of time, just quickly, the return on equity like 10 years ago was sort of in the 20%, and then it moved down to like 18, 19%. Now we're in sort of like 16%. I realise that there have been changes in the environment during that time. Is the sort of 16 would lower the new normal now? Can we expect? While we'd like to head back to the heady days of the 20%, I think that's probably unrealistic. Do you have any comments on it?
I think the 16% return on equity that we have at the moment is in keeping and in line with our ASX peers. We don't make forecasts about the future, but it's certainly in line with the ASX peers.
Well, we'd hope that you would do better than the peers, though.
Well, I think, as I've said, we run our bank with a view to the best financial performance, but in a responsible way that we can. And if you look at our other bank peers, the 16% is a good number.
Thank you very much.
Thank you. Microphone 2, please.
Chairman, may I introduce Mr Hugh Vaughan, a shareholder?
Thank you, Madam Chair. I have a question about a story this week in the Australian Financial Review referring to severe financial distress in the Wiggins Island coal export terminal. It says that unless a takeover of the terminal can be arranged, banks exposed to the project face the biggest write-downs in corporate history, collectively up to $1 billion. Is Commonwealth Bank exposed to this project? And if so, is the board writing down the value of our debt exposure?
So thank you, Mr Vaughan. We don't comment on individual clients, and I think as Chief Executive has outlined, we have very rigorous measures around our provisions for impairment. So you can be confident that we have been conservative in those provisions. Thank you.
Okay, thank you.
Microphone 2, please, again.
Chairman, may I introduce Mr Paul Fanning, a shareholder?
Thank you, Katherine, and thank you, Ian, for your addresses. And I've been to probably nearly every AGM for CBA in the last 10 or 12 years in every capital city. Now, questions relate to pages 28 and 29 of the annual report, and I'm going to ask specifically about your wealth management unit, and then I'm going to look at your Bank West operations. Perhaps I'll look at Bank West operations, and we know that there was a masterstroke when CBA was able to invest in Bank West at the height of the GFC, and it was probably an opportunity that wasn't to be missed, and overall it has been a good result. However, there seems to be a lot of loan impairments which seem to be pulling back the results although diminishing trailing loans, but it seems to be having an impact on the divisional result. Now, I think the same issue was around last year with Bank West. There seems to be a diminishing cash impact, which is probably not very good. So we have pockets of the economy, which I think, Ian, you mentioned, are still being addressed. Unfortunately, it seems to be manifesting itself still quite strongly in Bank West. So these are probably issues which you probably begin across the broad spectrum of shareholders, retail, institutional and fund managers. So there's one point. Now, in addition, wealth management. Wealth management probably in the Tier 1 banks has seen the best part of investment returns in bygone years, and it's probably not a key area of focus. One of the large institutional institutional managers is actually looking for and on behalf for CBA of the future of Colonial First Asset Management. We probably shareholders need to realise here that a lot of the investment operations for Colonial First State, while they are important here in Australia, there are a lot of investments in overseas. So is it on a risk-weighted basis and on a projected ROE for wealth management, particularly Colonial First State, is it really worth holding on to in the future? I won't name the actual entity who is looking in doing some exploratory demerger or an IPO for Colonial First State, but definitely these are issues that we probably need to look at. So those are my two questions. Thank you.
Okay. Well, thank you very much, Mr Fanning, and can I thank you for your dedication to coming to all of our AGMs over the years. Mm-hmm. In relation to Bank West, you're correct. Clearly the economic conditions in Western Australia have been very challenging, and that, of course, reflects in the results of Bank West. And in a moment, I'll ask Ian to comment on that. In relation to the investment management business, as we have announced, we're undertaking a strategic review of that business, but no decision on the way forward has been taken. And this is part of just what you would expect in terms of looking at our portfolio and doing portfolio rebalancing where appropriate. And as you know, we sold or are in the process of selling our life insurance business, and that was as a result of a portfolio review. But Ian, you might want to comment on Bank West and the impairments.
Yeah, thanks, Chair. And I'll just echo the Chair's thanks to you, Mr Fanning, for loyalty. It would not be an AGM without you. Just on Bank West, I mean, it really is a function of what we've seen generally in the Western Australian economy. Obviously, over a number of years, the economy benefited from the high proportion of new mining investment in that economy, which I think at one point was about 9% of GDP. That's come back to below 3%. The trends of that we all know. Bank West has actually performed really well in that environment. As you will know, because you were here at the relevant AGM, we paid about $2 billion for it, and it's returned, even in these conditions, $700 million after tax. But we've managed it conservatively, so the top line has grown a bit more slowly because the Western Australian economy has grown a bit more slowly. And at the same time, although the overall level of arrears for households and businesses and loan quality has been actually pretty good given the economic circumstances, it has been a more challenging economic time, and that's reflected in the results. But as I said at the outset, we're long-term investors. The business is going well, and we're very committed to the state for the long term.
Thank you. If I can have microphone 1, please.
Chairman, may I introduce Ms. Julia Angrisano, a shareholder?
Thank you. On behalf of the Finance Sector Union of Australia, my question relates to a remediation program. On the 14th of August, the Commonwealth Bank provided an update on customer and employee review and remediation actions. This update included the following advice. $10 million, including interest, was refunded to customers for Customer Card Plus insurance premiums. $586,000, including interest, was refunded for some home loan protection insurance customers. $5 million, including interest, was refunded for charges on disputed card transactions. $16.7 million plus interest was paid as part of a review of employee superannuation payments. For full transparency, can you please advise how much was the total cost of remediating employees as part of the review of superannuation, and why did the CBA not disclose publicly the total liability of superannuation review, but advise the total cost, including interest payable, of other remediation programs?
Thank you for that question. I'm not quite sure, but in terms of the superannuation, yes, we did identify that in fact we should pay additional superannuation to employees in relation to overtime earnings, which was a decision that we made having reviewed an earlier decision. But in terms of the amount of interest that we paid, it was about $6 million of interest to employees as well as the remediated superannuation.
Thank you.
Thank you. Microphone 2, please.
Chairman, may I introduce Ms. Sonia Davey, a shareholder?
Yes, good morning. I represent the AASA, which currently holds 6.8 million proxy shares, and that makes us collectively the 8th largest shareholder. Now, in relation to the Directors' Report, firstly, can I congratulate you on being appointed as Chairman to the Board, and we look forward to having many meetings with you. Now, you've spoken about board renewal. You could actually call it a major board shake-up. Can you tell me how many directors are you looking at replacing, as well as the CEO, the Managing Director, and how is the process going?
Well, as I've said, board renewal is an ongoing process, and as you point out, to the extent that we've had 4 directors who've retired from the board in a 12-month period, it's a very significant change out of 9 non-executive directors. As we have Rob Whitfield here, who's up for election today, and as I said, we're delighted that Rob has decided to join the board. And we will be looking at further appointments over next year. Obviously, we've got ongoing retirements as well, and we need to replace those directors. So the board renewal process is an active and continuous process. Thank you. Microphone 1.
Chairman, may I introduce Shangrasegaram Balakrishna, a shareholder?
Good morning, Mr. Chairman, and good morning to you board members. You've just thrown a spanner into the wheels here by just saying that you're only going to give a person about 10 minutes. I've come all the way from Brisbane because I have some very serious allegations to make against the Commonwealth Bank, and I thought the best thing to do would be first to come and have a talk to you all and explain what the problems are and have some kind of a reasonable thing done. I've got a bank manager at your branch at Stafford who has $10,000 of my money, and he's refusing to give me that money back. It's not his money. It's not the Commonwealth Bank money. It's my own money, a hard-earned money. That's the ridiculous situation I'm faced with. I've got a 10-page report that I prepared to read to you because at 83 years of age, I cannot remember what happened 10 minutes ago. Despite all that, I've come here to seek justice. And I'd like to know what you're going to do about this, please. Don't please think that I'm being arrogant in any way. I just want to see whether we can amicably sort this thing out.
Well, thank you very much, Mr. Balakrishnan. Can I suggest that we organise for one of our customer service representatives to sit down and talk with you immediately after the meeting and to go through the details?
Okay, Mr. Chairman, I appreciate that because holding 35 independent shareholdings is quite a lot. That shows you how much of faith I have in the Commonwealth Bank. I still think the Commonwealth Bank is the best bank in the whole of Australia, but there are employees that you don't know about, and I think they need to get sorted out.
Yep,
Thank
absolutely.
you, Mr. Chairman.
Thank you very much for your comment. Microphone 2, please.
Chairman, may I introduce Mr. Paul Gribble, a shareholder?
Good morning, Chairman, Board and Executive. I speak as a shareholder and also an ex-staff member. But at the time that the Commonwealth Bank floated, there were a number of audits and inspections systems which were in place and had served the bank very well. These audits and inspections within this each branch, there were daily audits, there were weekly audits, monthly audits, half-yearly and yearly audits. Externally, from Capital Office and Head Office, there were inspections. There was a inspection yearly on a biannual basis, and we also had an audit team which came in on the other year. Now, as these systems worked so very well, and I feel overcame many problems before they ever became too big, I'd just like your comments as to the present systems in this regard, please.
Thank you very much, Mr. Gribble. And you're absolutely right in terms of the importance of reviews and audits. And again, as you'd know, we operate in a very highly regulated sector, and the regulation is increasing literally by the day, and the number of regulators that have oversight of our business are also being expanded. I think we've acknowledged in relation to one area of regulation, which was the transaction monitoring required by one of the regulators, which is AUSTRAC. There were deficiencies in our compliance processes, which have been identified, and we remediated immediately once that transaction reporting deficiency was identified. I can assure you that we have multiple audits going on at any time, both our own internal audits as well as reviews from regulators in the ordinary course of their business, and of course we have our external audit. So these measures, which we call the third line of assurance, are crucial to the running of the bank and compliance with all the regulations. That's in addition to what we call line 1 and line 2 responsibilities, and they're the people at the front line who are running the bank, and they also have accountability for making sure that we comply with all of our regulations. But thank you very much for your question. Microphone 1.
Chairman, may I introduce Mr. Robert Catterson, a shareholder?
Good morning. My first question was to Ian Narev, the chairman, and I gave him a question at the last annual general meeting that I attended after the financial advice scandal with the media and everything like that, and Ian Narev said that we would never again, or we had a situation, he'd never sort of never would be the word. However, since then, and part of his watch has also been the insurance situation, and also the current situation with AUSTRAC and the money laundering situation. From my observation of the media, this company has a lot of, and Ian Narev has mentioned the wonderful people that work for the Commonwealth Bank, but there's also a number of people that are cowboys that are working for the Commonwealth Bank. Have we got processes in place now that we will never have another scandal such as we've seen before with insurance, the financial advice and the money laundering? Have we got the right systems in place, that the regulators will be pleased with? And have we got the right sort of internal situations where we make sure that we don't employ cowboys in the future?
Thank you, Mr. Catterson, for that very important question. So perhaps if I can take it in a few parts. First of all, the CommInsure situation that we had last year and then into this year. Can I just clarify that absolutely there were operational failings in CommInsure, and we could have done better, including definitions that were not as contemporary as they should have been. And we absolutely accept that, and there have been significant changes in that business to make sure that those operational failures do not occur again. But there were 3 separate reports and reviews done of that business as a result of the media allegations by DLA Piper, Deloitte and EY. 3 separate reports. They all concluded that there was no willful misconduct in that business, nor systemic approach to deny people their rightful claims. So there's a distinction between operational failures, which, as I say, we absolutely acknowledge there were, and even if one client has a bad experience, that's one client too many. So absolutely accept that. But the media allegations that were made were not substantiated. So that's in relation to CommInsure. In relation to the AUSTRAC matter, again, if you come back to the employees and your reference to their behaviour, the board, as you know, has a subcommittee which is undertaking a detailed review of the root cause of those issues. And in all of the work that we've done so far, and the work is not yet finished, there is no evidence of malfeasance on the part of any Commonwealth Bank employee or misconduct. It's very important to emphasise that the accusations of money laundering are in relation to individuals outside the bank. The bank has not been involved in money laundering. The bank employees have not been involved. And that's a really important distinction. We would absolutely never knowingly support money laundering or counter-terrorism financing. But your question about whether we have actually put in place and are putting in place processes to make sure that we do comply with the anti-money laundering and counter-terrorism financing regulations is important, and we have had in place a program of action since 2015 when the failure to report the transaction threshold reports, which is what AUSTRAC requires. They require those for any transaction which is $10,000 or more. That's not to say those transactions are money laundering transactions, they just are $10,000 or more. So we have put in place, over the time since then, we've invested over $230 million in improved transaction monitoring software, in specialist centre of excellence in terms of know your customer capability. We have increased our, as I said, the capability and the investment in the people. So it has actually been a huge investment to make sure that we upgrade those processes so that we are in compliance with AUSTRAC's regulations. But thank you very much for your question, because it's a very important matter in the bank at the moment.
Okay, my supplementary comment is that as a shareholder, I've done quite well out of this bank. I'm very pleased with the way this bank has performed since I bought shares in the last float of the bank. However, I must reiterate that we're not here just to get good dividends out of this bank. I would rather see this bank, when I looked at that Four Corners report about the insurance and also the financial advice scandal that we had in the bank, I would rather our employees are winning, our customers are winning, and also us as shareholders and the people that I'm looking at that front table are winning as well. I don't want to see situations where we're embarrassing ourselves with the media with these scandals into the future, please.
Well, I can only endorse your sentiments, and they are absolutely the intent of the board and the management team and all employees. The employees of the bank, they are very proud of the bank, and when these things happen, they feel damaged as well. So none of us wants this to be the case at all. So, as I say, I would absolutely endorse your sentiments.
Thank you.
Thank you. Microphone 1 again.
Chairman, may I introduce Mr. Peter Melser, a shareholder?
This is a question for the Auditor. Last year, the Auditor said that climate risk was not included as a material business risk. Now, I note that this morning you have said that climate risk is now being considered as a material business risk. I'd like to ask the Auditor how this has changed the financial reporting, or in other words, a broad way of saying how is climate risk incorporated as a material business risk in financial reporting.
Thank you, Mr. Melser. So just to clarify, in both last year and this year's annual report, we've identified climate risk as a factor that we take into account. But if I could ask Mr. Marcus Laithwaite to come to the microphone and respond to that question in the context of the conduct of the audit.
Thank you, Chair, and good morning, ladies and gentlemen. Thank you for your question, Mr. Melser. In regards to the climate change, we obviously answered the question from last year. We do recognise that the bank includes it as a business strategic risk, and I think you'll find that's included on 151 page 151 of the annual report. We actually consider how the bank uses or looks at those business risks in terms of the broader financial statements and reporting of the financial results. We use specialist environmental and sustainability support from within our firm to guide and assist the audit team during the 2017 year to actually consider how the bank reports on its climate change and how that relates to the broader financial statements, but particularly as well to individual assets.
Thank you. Thank you, Mr. Laithwaite. Now, I'll just take two more questions on this item of business. So, do we have a question at microphone 2? Thank you.
Chairman, may I once again introduce Mr. Philip Galvin?
Chairman, just a follow-up question. I don't think I got an answer with regards to my request, which was about the preponderance of third-party frameworks that the bank's adopted over the last 10 years. I requested that no more be adopted for the next 12 months and the board return to shareholders with an explanation as to what frameworks you've adopted and adhered to and how you consider those to be in the best interest of shareholder returns. I think we sort of brought it to an end before we got to that point. So if I could just actually have your response to that, please.
Great. Thank you, Mr. Galvin. Well, I think, as I said, many of the frameworks we're required to comply with by law. The other frameworks that we've adopted are fully discussed in our corporate responsibility report, which includes the reasons for our adoption and the reasons we think that they're good for the performance of the business. So can I recommend that corporate responsibility report to you?
Yes, thank you, Chairman. I've looked at that in detail, and that was actually the basis of my question. As a closing comment, I'd just say it looks like things like UN frameworks have run amok inside the banking sector in general. CBA is no exception to that. I just recognise that it actually forms quite a substantial drain on resources, both to implement, monitor, operationalise and maintain, and I just don't see any direct link to the returns to shareholders. But we'll leave it at that. Thank you.
Thank you, Mr. Galvin. Microphone 1.
Chairman, may I introduce Mr. Luis Gomez, a shareholder?
Morning, Madam Chair, and may I say first up how pleased I am to see you on the board. Your openness, honesty, transparency in these circumstances has been a real boost of confidence, I think, for us shareholders and no doubt customers and the community at large. And I think your board renewal program is excellent. It's great to see Rob Whitfield on the board, and I'm hoping there'll be others like him to come. My question relates to the way the Commonwealth Bank has been handling a number of these adverse reports. It just seems to me that the bank is often on the back foot, whether it's CommInsure, the Storm Financial scandal. We hear from Mr. Narev this morning, we've read it in the press, that the amounts that have been settled have been very modest in the $35 million. I'm sure there's clearly adverse stories there, but I'm sure there's some good stories as well, which we never hear about. And just before the AUSTRAC debacle emerged, there was a story, I think it was coming out of Townsville, in regard to a company and some directors of that company who claimed that the Commonwealth Bank had sent the business broke. And I think Kate Carnell got involved in that exercise as well, and there was, again, a lot of bad publicity directed towards the bank. The Financial Review seemed to be running the counter-argument on behalf of the Commonwealth Bank, which seemed to challenge and question a number of the allegations being made against the bank. It sounded to me, reading these reports, that the bank actually had a very good defence against the allegations being made. And yet we didn't seem to be able to get that story across effectively through the media, whether in the press or on television. I think there was a Commonwealth Bank spokesman interviewed at one stage, but to be honest, he was completely outperformed by the likes of Warren Ench and Kate Carnell and others. Has the bank got a more robust approach to dealing with these stories that tries to not to cover over what's been done poorly or badly? We have to be upfront, as you have been, and that's what we must be. But where there are situations where, in fact, the bank has done the right thing or has done as much as it can do to mitigate that customer's difficulties, is there a way of getting those stories out in a more effective way than we've been able to do to date?
Thank you very much, Mr. Gomez, for that question. I'll ask Ian to comment in a moment on that particular situation that you refer to. But I absolutely agree and take your point, and we have actually tried with this AUSTRAC situation to be very upfront, very quickly. Our appointment of the board subcommittee was almost immediate, and again, we've tried to keep everyone informed as this is progressing, and we will be lodging our defence in the court on the 15th of December, and that again will be public. So, but I agree with you, it's very important that we're open about the issues that are affecting us, but also that we're open about the positive sides, the steps we're taking, and that we correct the facts as far as possible, where that's important. But Ian, can I get you to comment on that Townsville situation?
Let me say, first of all, I completely understand the question. From the point of view of people interested in the Commonwealth Bank, I can understand how it looks like we're on the back foot. It looks like we're responding and not getting enough of the good stories out there. I will say a couple of important points of principle. Number one, to your comment earlier about transparency, the underlying principle we have at the bank is if we have made a mistake, we'll acknowledge it and put it right. And therefore, we're very careful when there are allegations to make sure that we hold true to that principle. And it's an unfortunate fact of running institutions of this size and scale that sometimes it takes a while to be able to do all the work till you can make that statement authoritatively, because the worst thing you can do is issue denials or make statements and then subsequently find, as you're going back for years, that your initial statement was untrue. And there's an argument we over-index on that way, but we feel that's the right way to go. Secondly, though, I think to your point, we are always looking for better ways of both responding and getting good stories out there. Some aspects of this are difficult. Our particular spokesperson on that issue, who is really an executive in whom we have enormous confidence, it's fair to say that some of the most important bits of what he said did not make it to the piece that you would have seen. And, you know, that's life as we deal in the public realm, and we need to accept that and adapt to it. But secondly, it very much is top of mind that beyond responding to specific situations, we do whatever we can to get out there the very, very good stories of what 50,000 people are doing every day. There are arguments about whether good news does quite as well these days as bad news. That's another challenge that we have, but we will continue to work very hard on the point you make. I think it's an understandable one and an important one.
Thanks, Ian. Well, thank you, shareholders, for all of those questions. So we'll now finish that item of business and we'll move to the next item on the agenda, which is the re-election and election of directors. So the resolutions for the re-election or election of each director will be dealt with separately, and the board considers that all directors standing for re-election or election are independent. The board, with the exception of each director in relation to their own re-election or election, recommends the re-election of David Higgins, Andrew Mole, Wendy Stops, and the election of Rob Whitfield. I will ask each director standing for re-election or election to briefly address the meeting regarding their candidacy. So moving to item 2A, which is for the re-election of Sir David Higgins, who, in accordance with the bank's constitution, retires as a director and offers himself for re-election. David has been a member of the board since September 2014 and is chairman of the Remuneration Committee and a member of the Risk Committee. I now invite David to address the meeting.
Thank you, Chair, and good morning, ladies and gentlemen. I stand here today for re-election as a director of the Commonwealth Bank, having been on the board for 3 years, and I'm very proud and feel very privileged to have been a director of the Commonwealth Bank in that period. My professional background is in the investment and development of property and infrastructure, which are core assets in which the bank lends money to customers on. Since the last AGM, as chairman of the Remuneration Committee, I've worked very closely with bank executives and Remuneration Committee board members to consult with shareholders and ensure that we have a much greater alignment of executive remuneration with shareholder returns. In addition, we've done considerable work to strengthen the risk gateway to ensure that any variable pay will reflect operational risk impacts that applies to both current and past executives. The Remuneration Committee report, which goes to shareholders' vote at this AGM, reflects those proposed changes. Over the next 12 months, the single most important decision board members in this bank have to make is the appointment of the new chief executive of this organisation and to strengthen the operational risk controls within the bank. I've been chief executive officer of 4 different organisations, and I'm currently chairman of 2 other organisations that manage very substantial investment risks, and therefore believe I can play an active and valued role in that process. Thank you.
Thank you, David. Now, are there any questions on this resolution? Microphone 1, please.
Chairman, may I introduce Mr. Howard Pascoe, a shareholder?
Thank you. Through the Chair, Sir David Higgins, we have dual citizenship problems in the Australian society. You can't be in federal parliament, but we gather. And we also have the Ashes coming up, Australia playing England, and love to know whether you're supporting Australia or the UK. But my question is, where do you have the time? It's marvellous, your CV, but there's only 168 hours in a week. So there's 56 hours to sleep. You're assuming that you're a Christian and you have Sundays off, take 24 hours, so you've only got 88 hours to do anything. You're chairman of 2 wonderful organisations in the UK. There's no time for travel or recreation. How do you have the time?
Thank you, Mr. Pascoe. I'll leave the citizenship and Ashes matters for you to deal with, Sir David, after the meeting. But in terms of the commitment that David has to this board, it is quite extraordinary. He travels to every meeting and also spends actually long periods in Australia and dealing with individual matters. So, for example, on the Remuneration Committee, in all of the work that we did over the first 6 months of this year to address concerns of shareholders, David was a huge support and led the Remuneration Committee on that piece of work. So I can only assure you that from the perspective of the Commonwealth Bank, we see nothing but complete dedication. Thank you. Microphone 2.
Chairman, may I once again introduce Mr. Philip Galvin?
Thank you, Chairman. I have 2 questions for each of the directors being either elected or re-elected. Would you like me just to ask them once or for each director?
Once would be helpful, I think,
okay.
Mr. Kelvin.
Okay. All right. Look, I assume that every director's, other than just accepting the recommendation and appointment of the board, does their own personal due diligence as to whether they consider it appropriate they are a director. So this is really directed to their personal due diligence. Does the director personally believe in the bank's environment, societal and governance framework? And if so, on what do they base that personal point of view? That's number 1. Secondly, does the director personally believe in man-made climate change? And if so, on what do they base that personal point of view?
Thank you, Mr. Galvin. So I'll take the liberty of responding on behalf of all of the directors. In terms of the ESG frameworks and the environmental frameworks, they are endorsed by the whole board. They're approved by the board. The environment policy and the climate policy position statement in particular are board-approved statements. So that relates to the personal commitment of directors. In relation to a belief in climate change, I think that's a separate issue. Our whole purpose on the board is to make sure that our business is conducted responsibly, and in terms of our position on climate change, that's reflected in the climate change policy statement, which is endorsed by all directors.
Thank you, Chairman. Does that actually mean that there's no way of being able to elicit out of the individuals what they actually bring to the board from a personal perspective?
All directors bring a range of skills to the board. We have the discussions, and then, as I say, in the context of your question, the policies are developed and they're endorsed by the whole board, and it's a board position.
Right, thank you.
So if there are microphone one, is that? Can we have microphone one on, please?
Chairman, may I once again introduce Ms. Natasha Lee, a shareholder.
Thank you, Madam Chair. Whilst I understand that there will be a matrix of skills for the selection of board members, and on paper all the directors seem to be well qualified, also on the basis of gender diversity and ethnic diversity, you seem to have reasonable proportions there. We would have expected that these scandals would not have arisen because of that diversity and skills, but still they did. I realise that there is being a bit of a turnover of directors at the moment, so we're having to take it on trust that you have put in sufficient risk management processes to ensure that these sorts of scandals do not happen in the future. I am a little bit worried that the level of detail possibly which is flowing up is not reaching the board level. I think that some of those, particularly like the Austrac scandal, that information probably should have gone up to at least board level at an earlier stage to identify that. It's a matter of identifying sort of outlier performance, whether it looks too good to be true or it's performing badly. Can you give an assurance that you have looked at that, and people, and the board members in particularly, are looking at a sufficient level of detail and drilling into the numbers to ensure that scandals will not occur in the future?
Thank you, Ms. Lee. Yes, I can assure you that we're constantly looking at the way information flows to the board and the way it's considered, and that's not just to the board but also to the board committees. The challenge is making sure that it's not overwhelming, but it's not too little. And as the operations of the bank evolve, we have to constantly look at that flow of information. And I work closely with the CEO to make sure that we try and get that balance right. But it's, I can tell you the time that goes into thinking through the agenda for every meeting and what should be coming to the board is quite significant. And the same goes for the board committees, looking at that flow of information. But I would say that also our senior executives are very transparent in terms of bringing information to the board as well. But it is a very important part of our governance process. So thank you very much.
Thank you.
I think there are no more questions on this item, so I will put the resolution to the meeting. So displayed on the screen are details of the direct and the proxy votes received in relation to this resolution. So if you could please now mark your voting card in relation to item 2A, David Higgins' re-election. Item 2B is for the re-election of Mr Andrew Mole, who, in accordance with the bank's constitution, retires as a director and offers himself for re-election. Andrew has been a member of the board since July 2008 and is a member of the Risk Committee and the Remuneration Committee. As I said in my address, although Andrew has served on as a director for more than 9 years, the board has asked him to stay on the board for 1 more year while we implement and finalise the sale of the life insurance business. I now invite Andrew to address the meeting.
Thank you, Chairman, and good morning. This is the 4th occasion I've sought election to the board of Commonwealth Bank from shareholders, the first occasion being in 2008. As a long-serving director, it's reasonable for shareholders to ask whether I am still independent. I believe this to be so. Management will tell you I ask plenty of challenging questions and they need to be well prepared. I often have strong views and do not hesitate to express them to management or my director colleagues. I'm also well aware that with ongoing board turnover and a new chairman, I'm becoming part of the corporate memory. I believe this is also an important role for me to play in the period ahead. You may be aware that CBA is the only board that I currently sit on as a director. My other principal activity is coaching or mentoring CEOs. Currently, I'm working with CEOs of major companies in a range of industries, including energy, natural resources, infrastructure, listed property, and funds administration and registry services. This work gives me a broader view of the corporate scene and the economy, as well as perspectives on how leaders in other industries manage change and drive shareholder value. Over my 9 years' tenure, CBA has performed strongly. It's achieved clear leadership of the major banks in retail customer service, it's delivered the highest shareholder returns of the major banks, and it's built a widely recognised leading bank technology platform. But as we've heard today, CBA has also faced a series of issues, principally around our monitoring and management of operational risk. These issues have hurt our reputation and damaged trust in the organisation, and this has been a painful experience. It's not that long ago that CBA was viewed as though it could do no wrong, while today, in the eyes of some, it can do no right. The truth is, we were probably never as good as some made us out to be at the time, nor are we as flawed today as some would have you believe. In closing, I see the period ahead as a critical phase in shaping the long-term prospects for CBA. At its best, CBA is a globally outstanding organisation. We need to learn from our mistakes and build on our many strengths. We must strive to come out of this period as a stronger, leaner and more resilient organisation. I look forward in playing my part in facing that challenge, subject to your support today. Thank you.
Thank you, Andrew. Microphone 1, please.
Chairman, may I introduce Mr. Colin Fulton, a shareholder?
Madam Chair, I'm not sure whether this is the right time to ask this question. I'm just wanting to ask a question on AUSTRAC. If you want me to ask it later, I'm happy to sit down.
No, perhaps would have been helpful to ask that before, but please go ahead and ask it now.
Thank you. I'm wanting to talk about the class action as well as the possible court penalty that will result from the AUSTRAC mistake. Firstly, in your balance sheet, where is or will be such an impairment or court penalty be reflected? Secondly, has the board decided just how severe this impairment or penalty will be? And if so, could you share that with us? And thirdly, what is your methodology behind such a calculation?
Thank you, Mr. Fulton. At this stage, we're focused on preparing our defence in relation to the AUSTRAC allegations. And that defence will include referencing mitigating factors which the court might take into account, such as, for example, all the work that we have been doing since 2015 to address, in particular, the transaction monitoring question. It would be inappropriate to speculate at this stage on what any financial penalty could be. And if and when the court decides, then clearly that will be a public matter and we would provide in our accounts. But you will see that it's noted in the subsequent events note that this has occurred, so that's where it's reflected in the accounts at the moment. But as I say, all of our focus at the moment is on preparing our defence so that we can lodge it with the court on December 15. Thank you.
And where will these be reflected in your balance sheet? Will there be an impairment or will it reflect in goodwill?
If there were to be a financial penalty, it would be reflected as a provision and then obviously in a payment, if that were the case.
Thank you.
Thank you. Microphone 2.
Chairman, may I once again introduce Ms Sonia Davey from the Australian Shareholders Association.
Mr Mole, is it true that one of the CEOs that you mentor is Ian Narev?
So can I address that question? During the time of Mr Narev's tenure as CEO, he has not been mentored by Andrew Mole. Back to microphone 1.
Chairman, may I introduce Mr Reuben Wesseck, a shareholder?
Good morning, and I must congratulate you on the wonderful results. All the speakers have been mentioning how good your executive team are, and this relates to the remuneration and our addresses to that committee. By cutting or reducing their bonuses, is it not a disincentive to your team? Are you not afraid of losing your top executives to other organisations who would be happy to pay the market rate for what excellent work they've done? Thank you.
Thank you, Mr Wesseck. I can assure you that the board, in taking the decision it did, it was done in recognition of the impact on our reputation of the lodging of the AUSTRAC civil proceedings. It was a decision not taken lightly, but again, that is the purpose of our variable remuneration structure, that if there are risk or reputation issues, then that will be reflected in adjustments to that variable remuneration, and I think that's what shareholders would expect. But it was, we recognised the impact on the individuals, but we also had to recognise the accountability, the collective accountability that was required in those circumstances, and that included also the cut in directors' fees. Thank you.
Thank you.
Microphone 2.
Chairman, may I introduce Ms Milena Dunn, a shareholder?
Thank you, Chairman. My question is about the makeup of the board in one instance. Is there adequate mentoring of and coaching so that we get a more representative number of females and of different ethnic and cultural aspirations? And secondly, Mr Mole mentioned a leaner establishment. I hope he's not considering what the NAB has just recently done in firing 6,000 employees.
Thank you, Ms Dunn. So to your first question, absolutely we take diversity very seriously, and we have a commitment of having a minimum of 40% of women on the board, and if you take that to non-executive directors, so that's of 9, then it's closer to 50%. So again, very important commitment to diversity. I think in relation to Mr Mole's reference, he was talking to the point of efficient processes, not numbers of people. Thank you. So I don't think there are any further questions on this resolution, so I now put the resolution to the meeting. Details of the direct and proxy votes received in relation to this resolution are displayed on the screen. So please mark your voting card in relation to item 2B, Andrew Mole's re-election. So we move to item 2C, which is for the re-election of Ms Wendy Stops, who in accordance with the bank's constitution retires as a director and offers herself for re-election. Wendy has been a member of the board since March 2015 and is a member of the Remuneration Committee and was recently appointed as a member of the Audit Committee. I now invite Wendy to address the meeting.
Thank you, Chair, and good morning, ladies and gentlemen. As stated, I joined the board of the bank 2.5 years ago in March 2015, During my prior 32-year executive career, I worked for Accenture, a large global information technology consulting and outsourcing organisation. The notice of meeting provides some further background on my final key roles in that organisation and other directorships that I hold. The Commonwealth Bank is at the forefront in the use of technology and digital innovation in the banking industry, both locally and globally. It understands how to use technology for strategic advantage and puts the discussions on technology front and centre at the board and executive tables. Since joining the board, I have been able to use my many years of information technology experience to both contribute to discussions and debates in this space and provide guidance. This has been of both a strategic and operational nature, and with both executives and fellow directors. In addition, I've been able to leverage my knowledge and experience managing large, complex and diverse groups in various parts of the world to contribute to discussions at the board table in areas such as our international business strategy, people and performance management, and operational risks. My membership of the Remuneration Committee also provides an avenue for me to share my knowledge and practices from my direct international experience in a large people-oriented business. I continue to believe that the bank is a world leader in many respects, with extremely skilled and talented executives who are very passionate about what they can do for their customers, you, their shareholders, their employees, and the broader community. I am honoured to be a member of the board, and with your support, I know I can continue to make a strong contribution to the board and the company in the future. Thank you.
Thank you, Wendy. Can I go to microphone 3?
Chairman, may I introduce Mr. Saville David, a shareholder?
Good morning, Madam Chair. I apologise for missing the window of opportunity to raise this question during item 1, but in a statement from you on the 9th of August regarding the AUSTRAC allegations, one of the statements you made was that the bank was promptly fixing the coding error relating to the independent deposit machines and the threshold transaction reporting. And another statement you made was that the bank was recruiting more than 50 financial crime compliance professionals. My question is, what has happened to the 50 crime compliance professionals that those new ones replaced? Were they fired or were they just moved elsewhere in the bank?
Thank you, Mr. David. No, they were incremental, and we've continued to add people to our financial crimes compliance group as we continue to strengthen our processes. So we're adding people, not replacing people. Thank you for your question. Microphone 1.
Chairman, may I introduce Ms. Mary Ansich, a shareholder?
Thank you very much for the opportunity to address you here. I also want to talk about the AUSTRAC issue, and seeing Ms. Stopps appears to have great expertise in the IT field, I would like to know when you personally became aware of the software glitch and how quickly that software glitch was stopped.
Thank you, Ms. Sanchez. Yes, well, we became aware of the failure to lodge the TTRs in August 2015, and we immediately investigated it, identified that it was as a result of a coding error, so fixed it, and then within 4 weeks had gone back through all of the transactions that should have been monitored and provided AUSTRAC with the outstanding TTRs. So that particular breach, which was the result of a coding error, was actually remedied within about 4 weeks from the point at which we became aware.
Thank you.
Thank you. I think there are no other questions on that item. So I will now put the resolution to the meeting. Details of the direct and proxy votes received in relation to this resolution are displayed on the screen. Please now mark your voting card in relation to item 2C, Wendy Stops re-election. Moving then to item 2D, which is for the election of Mr Robert Whitfield, who, in accordance with the bank's constitution, retires as a director and offers himself for election. Rob has been a member of the board since September 2017. He's a member of the Risk Committee and the Nominations Committee. I now invite Rob to address the meeting.
Thank you, Chair, and good morning, ladies and gentlemen. With the announcement of my appointment to the CBA Board of Directors on the 4th of September this year, it's an honour today to stand before you to seek election from the bank's shareholders on my candidacy. In July 2017, I retired from being a full-time executive, a career that included 30 years' experience in the banking and finance sector and 2 years in the public sector, serving as the Secretary of the Treasury and Secretary for Industrial Relations for the Government of New South Wales. I'm currently Director of New South Wales Treasury Corporation, having previously been Chair. I hold a Bachelor of Commerce, postgraduate qualifications in banking and finance, and I'm a Fellow of the Australian Institute of Company Directors. I am a passionate career banker. I have extensive experience across fundamental banking disciplines, and the skills and experiences I have gained in leading those global businesses, developing risk functions and optimising all aspects of Treasury operations will be valuable in the current environment as we rebuild the trust and sustainability of the bank's reputation. My career has demonstrated proven skills in leadership, business optimisation, strategy development, customer service, innovation, and mergers and acquisitions. These have been underpinned by the values of integrity, transparency, fairness, and accountability. The Commonwealth Bank of Australia is an iconic company. It plays a critical role in securing the financial well-being of people, businesses, and communities. This is of paramount importance for the Australian economy to prosper and grow. As a non-executive director, I look forward to actively contributing to the good governance and corporate culture required for CBA to fulfil these important obligations. It will be an honour and privilege to receive your support for my board candidacy. I am passionately committed to contributing to help the bank navigate the challenges and the complexities we face. I look forward to receiving your support for my appointment. Thank you.
Thank you, Rob. Are there any questions in relation to Rob's election? Microphone 1.
Chairman, may I introduce Ms. Kiralee Parker, a shareholder?
Thank you, Chair. I would like to ask a question, please, about the culture at the CBA and what the directors who are seeking election and re-election are doing in terms of improving the culture so that the scandals that we've talked about today can be avoided in the future. Thank you.
Thank you, Ms. Parker. So if you think about culture, the way we think about it at the bank is we break it down into some 4 core elements. So one is around people, another policies, another processes, and then finally technology, because they define the environment in which people work. So making sure that you have processes which help people do their job, policies which make it clear in what they should take into account in that role, technology which supports them in that role, and then they themselves, and we talk about the values that we have in the bank. So we are working across all of those 4 elements which, again, in terms of all of the improvements that we're putting in place, will create an environment which will be even more helpful for the people who are working in the bank to do their jobs in the best way possible. And I can assure you the directors standing for election and re-election are actively engaged in all of those activities across those 4 elements. So thank you for the question. Microphone 2.
Chairman, may I introduce Mr. Stuart Brew, a shareholder?
Good morning, Madam Chairman. My question for Rob is how many shares do you own in the Commonwealth Bank? And I suppose in general, what does the chairman think is the minimum for a company with, $64 billion of net assets? What do you think the minimum number of shares owned by directors should be?
So, Mr. Brewer, we have a requirement that directors own a minimum of 5,000 Commonwealth Bank shares, but they can accumulate that number over a few years once they're appointed. So they don't have to have 5,000 on appointment, but over time they do have to accumulate 5,000 shares. Thank you.
Thank you.
Is there another question from microphone 2?
Chairman, may I introduce Mr. Kelvin Lee, a shareholder?
Hello, Chairman. I'm going to vote for the appointment of Mr. Whitfield. My question is, does appointing Mr. Whitfield as a non-executive director, does that preclude him from becoming an executive in the future? In other words, to possibly fill the CEO role in the future? The reason I ask that is because Mr. Whitfield was a very strong candidate to become Westpac's CEO, and he had a lot of support a number of years ago.
Thank you, Mr. Lee. Can I assure you that Rob is absolutely committed as a non-executive director of the Commonwealth Bank? Can I have microphone 1, please?
Chairman, may I introduce you to Mr. David Green, a shareholder?
Thank you, Chairman, for being a woman, and I like that. Five on the board. It's good to see.
I try my best.
More,
yes.
please. This morning I read Men Are Not Funny, so a bit of humour helps as well. To Rob Whitfield, who I've just read has apparently been selected as a long-shot possible CEO in the future, I would like to, as a Labor voter, I'm not very happy with the New South Wales government's riding roughshod over local residents' concerns like West Connex. So how can we be confident, if Rob Whitfield does get something like CEO in future, that he will not be pushing for money-only concerns, ignoring local residents' concerns?
Thank you, Mr. Green. As I have said to the previous shareholder who asked the question, Mr. Rob Whitfield is absolutely committed to his role as a non-executive director of the Commonwealth Bank.
Thank you very much.
I think there are no more questions on this resolution, so I will put the resolution to the meeting. So displayed on the screen are details of the direct and proxy votes already received in relation to this resolution. Please now mark your voting card in relation to item 2D, Rob Whitfield's election. The next item on our agenda is item 3, the resolution to adopt the bank's remuneration report for the year ended 30 June 2017. The Remuneration Report is included in the bank's 2017 annual report. This year, as I've said, your board has undertaken extensive work responding to your concerns regarding the remuneration structure previously proposed for the bank's executives. We have consulted widely with stakeholders throughout the year as part of a comprehensive review of the executive remuneration strategy, framework and governance. Substantial changes have been made to the approach and transparency of our remuneration practices, reflecting our commitment that community trust in your bank and its reputation are key criteria in delivering sustainable outcomes for shareholders. A table setting out your concerns and commentary on the changes we have made to the Remuneration Framework is detailed in the annual report and was repeated in the notice of meeting for your convenience. Executive remuneration outcomes must strongly link to performance outcomes, with financial performance being a core component of this. They must also demonstrate full consideration of executive accountability, including for risk and reputation matters. The Board and I are of the firm belief that in today's challenging environment, long-term shareholder value will be delivered not just through direct financial results, but also the way we do business, how we support our people, and our role in society. In terms of changes to long-term variable remuneration, in addition to total shareholder returns, we have now included trust and reputation and employee engagement measures. This reinforces the importance of balancing the needs of shareholders and customers and the expectations of the broader community, while ensuring that our employees remain proud advocates of the company. Achieving the targeted and measurable outcomes for both these non-financial measures will require substantial initiatives to be delivered throughout the group, including long-term initiatives focusing on culture, risk and reputation. This will challenge your management team to focus effort on initiatives that strengthen the group's trust and reputation with all stakeholders, as well as fostering employee engagement. In addition, these non-financial measures will not be taken into consideration unless a positive change in total shareholder return is achieved over the performance period. We are confident these targets are set at a challenging level, which requires true outperformance before rewards can be achieved. In terms of short-term variable remuneration, to ensure a greater level of executive accountability and alignment with shareholders, we have also increased the length of deferral periods and changed the deferral vehicle from cash to equity for all executives. As we've noted earlier this year, your board exercised discretion to reduce to zero the short-term variable remuneration for the CEO and executive team for the financial year 2017. The long-term variable remuneration outcomes for former executives were also reduced by 40 to 70%, and deferred short-term variable remuneration was totally forfeited. Your board also reduced non-executive director fees for the 2018 financial year by an amount equivalent to 20% of our individual FY17 fees. An overriding consideration in making these decisions was the recognition of the collective accountability of the executive team and the board for the overall reputation of the group and risk matters. Your board retains the discretion to reduce remuneration rewards of both current and former executives when we determine further reductions to be warranted. We appreciate the feedback provided during the year and your involvement as owners of the bank. So I'll now take questions relating to the Remuneration Report. So if I can go to microphone 1.
Chairman, may I introduce Dr. Eric Ansich, a shareholder.
Good morning, ladies and gentlemen. I've been a shareholder continuously since the 1990s. I have never been to an annual general meeting, but I am here today because of the AUSTRAC allegations. Katherine has already touched on these or addressed these in her chairman's address, so I'll try not to go over the same ground again, but I will have to refer to some of the aspects. A significant component of the AUSTRAC statement of claim, which I would add is available to anybody with internet access. It's not a private document, anybody can download it. A significant component of the claim relates to the intelligent deposit machines. As these were rolled out by the bank, these intelligent deposit machines were able to accept up to 200 banknotes per deposit. That is up to $20,000 per cash transaction, and as AUSTRAC alleges, the bank did not limit the number of intelligent deposit machine transactions that a customer could make in one day. Under Commonwealth legislation, the bank is required to report to AUSTRAC any threshold transaction, which is a transaction involving the physical transfer of currency in the amount of $10,000 or more, and that has to be reported within 10 days. And AUSTRAC alleges that the bank failed to report 53,506 of these transactions on time. In May and June 2016 alone, over $2 billion in total were deposited through the Intelligent Deposit Machine network. The statement of claim also identifies 4 money laundering syndicates and sets out their operations. What is most disturbing is the allegation that the bank considered one of the money laundering syndicates' account to be high risk and suspicious around the end of April 2015. By this time, some $14.7 million had been sent offshore through that account. However, the bank did not monitor this customer and permitted the highly suspicious activity to continue. Similar patterns of behaviour are alleged in relation to the other syndicates. Furthermore, the AUSTRAC claim alleges the bank was warned of suspicious activity in these accounts by the Australian Federal Police, but allowed the accounts to remain open. It seems to me that this goes far beyond the board's assertion, quote, that the main fault lay in the coding error in software related to the intelligent deposit machines that meant they failed to automatically submit reports when deposits above the threshold were made, end quote. Why was the coding error not corrected at least by April 2015 when the suspicions were identified? If the bank's senior management didn't know this was happening, how were the money laundering syndicates able to find out and bypass Commonwealth law? Was it just luck? I suspect this will be a major plank in the case to be put to the federal court by AUSTRAC. I'm not a lawyer, I'm an engineer.
Can you actually conclude your comments and come to your questions?
It's not a question, I'm speaking in relation to the motion.
Well, could you come to that quite quickly?
I've got about another minute to go, if you don't mind.
You.
I'm not a lawyer, I'm an engineer. But it's my understanding that these alleged offences are ones of strict liability. In other words, there is no need for AUSTRAC to prove intention by CBA, and the board appears to admit to the offences by their assertion that the main fault lay in the coding error. There's also the APRA inquiry, the ASIC allegations, and there's the shareholder class action over the same issue. Where will this all end? If the federal court only fines the bank $1,000 for each of the 53,506 alleged threshold transactions, that's a fine of over $53 million. So if the court does fine the bank as a result of these allegations and inquiries, who should pay the fines? If the bank pays, then it means that we, the shareholders, are footing the bill for the mistakes of the board and senior executives. If there is a fine, then in my view it should be paid by those directly responsible. For this reason, I oppose the adoption of the Remuneration Report, and I urge all other shareholders to do the same.
Thank you, Dr. Ansich. As I said in my address, many of these matters are the subject of legal proceedings, and therefore I'm not able to comment on the details other than to say that we are preparing our statement of defence, and that will include the mitigating factors that we would hope the court would take into account. To the extent that there is further accountability in relation to parts of the organisation or individuals, that will be taken into account in any further remuneration outcomes. But I can only emphasise, as I did at the beginning, how seriously we're taking these matters. Thank you. Microphone 2.
Chairman, may I once again introduce Ms Sonia Davey from the ASA.
Hello, I am directly addressing the Remuneration Report. This year, as opposed to last year, the ASA is recommending that people vote for the Remuneration Report. However, I noticed that a lot of our non-open proxy holders actually did vote against the report. Now, this might reflect my own feeling that the Commonwealth Bank missed an opportunity here to effectively redo remuneration, simplifying it, streamlining it, including things like vesting periods for equity rewards of 5 years or up to 5 years as a result of genuinely challenging hurdles, and with no vesting at all in the case of a negative total shareholder return. Is the board, and in particular the Remuneration Committee, looking at some sort of simplification along these lines?
Thank you, Ms Davey. I think we would all endorse your sentiment that the more we can simplify remuneration structures, I think the better for everyone, including executives. We do, I think, make the point that we do have the BEAR legislation, which will be coming through Parliament in this session, and that has particular requirements in terms of remuneration of senior executives and the CEO in terms of deferral periods. So we will be evolving our remuneration framework to make sure it does comply with those regulations. But I would say the Remuneration Committee is always looking to find ways where we can simplify the remuneration structure. So we would, as I say, endorse your sentiment. Thank you.
Okay, my other question's already been touched on, and that is the idea of capping CEO pay to 100 times average weekly earnings. Now, I don't think it was a coincidence that the vote against the Remuneration Report last year coincided with a jump in CEO pay from about $8 million, which is roughly 100 times average weekly earnings, to $12 million, or about 150 times average weekly earnings. And in contrast, this year, there's been more support for the report, and that was partly due to the pay now being around about 60 times average weekly earnings. Now, can you see a time when boards as a whole will voluntarily cap CEO pay?
I think boards have a responsibility to make sure that we have the ability to attract the best possible people to CEO and executive and, in fact, throughout the bank. And we have reference to the market and when we actually make the remuneration determinations. I would also say that we're very conscious of community concerns in terms of levels of remuneration and do take that into account. Thank you. Microphone 1.
Chairman, may I introduce Mr. Tom Taylor, a shareholder?
Thank you, Madam Chair, and obviously the AUSTRAC matter has some time to play out, so I won't hang on that too much, excepting to reflect upon what you have done in the Remuneration Report, and I think while it's clearly not a lot of money, the symbolic cut in directors' remuneration is, I guess, a way of sharing the responsibility in a way that's tangibly seen by staff as well. And clearly moving that through to the executives, and 100% of the variable component is perhaps in some minds savage, but nevertheless sends a clear message. So reflecting on that, just to ask the question, considering this in the context of the culture question previously, how far deep into the ranks did that variable remuneration cut occur? Because it's well and truly useful to have that symbolic thing at the director and then obviously the executive, but how far did it go through the organisation, and how clear was the message about the cultural significance of the move?
So, thank you, Mr. Taylor. All people who receive variable remuneration are subject to a risk and behaviours review before their remuneration is finally determined. So all I can say is everyone has been subject to that review, and that was particularly the case in the context of the 2017 financial year. So all variable remuneration was subject to that review as well. Microphone 2.
Chairman, may I introduce Mr. Rodney Jeffrey, a shareholder.
Chairman, my question, I would have gone further to AUSTRAC, but that's been clearly enunciated as to the problems that have occurred there, and I would think every shareholder here would hang his head in shame over the last few years of CommBank with CommInsure, AUSTRAC and inactivity. Where my question comes from is that, first of all, I ask that most of your executives, I think it's 8 out of 11, are on $1 million plus base pay to start. I ask, why should there be an incentive system at all? Aren't people committed with monies like that to the company on a very generous salary? That's the first question. Second question is, it's quite clear that since 2015, the executives and the board should have been aware of AUSTRAC and they've been aware of the other problems. Given that, I think it's very minuscule what you've done with respect to incentives. I don't believe the incentives should exist, but I believe every incentive since 2005 should be repaid, and I reckon for the future, until you correct your system, there should be no incentives at all. So can you give me a reason, first of all, why there should be an incentive system? Why are your people not committed to the Commonwealth Bank? Most people in this room, I'm sure, don't work on incentives. And secondly, why isn't there a catch-up for the errors that have been made in the past?
Okay. Thank you, Mr. Jeffrey. Again, as I have said, we seek to attract the best possible senior executives, and that's what's laid out in the Remuneration Report. And the structure of the remuneration is fixed rem and variable remuneration, and we need to offer that structure to attract the best people, and we do have the best people in our senior team. The variable remuneration is subject to variability. That's why it's called variable, and we have demonstrated this year that that variation does happen. In relation to AUSTRAC, in 2015, when the matter in relation to the missing TTRs was identified, we remedied that, as I've said, almost immediately and worked with the regulator at that time. The statement of claim that AUSTRAC lodged on the 3rd of August contained many matters of which the bank had not previously been aware. So that's why the 2017 remuneration was affected as a result of the AUSTRAC situation.
Could I ask, you say to attract the appropriate executives you must have this incentive, an incentive system. Where is the evidence of that? It's the spin that's put out by every company, and it does not gel with me, and it does not gel with my colleagues that I talk to, and I'm sure, again, the people in this room would believe someone on $1 million shouldn't need an incentive, and there should also be a catch-up in the system. If you have an incentive system and don't perform, then you need to catch up on that lack of performance before you get an incentive. I don't believe you answered the question. You've skirted around it.
No, I have answered the question. The remuneration frameworks that we have in place are referenced to market, and they're the ones that we need to attract the calibre of people that we have. If we didn't have those frameworks in place, we would not be able to attract the people that you would expect would be of the quality that would be running the bank.
Thank you for the answer, but there's no evidence there. You are not putting evidence on the table. Disappointing.
All right. Thank you, Mr. Jeffrey. Microphone 2.
Chairman, could I once again introduce Mr. Philip Galvin?
Chairman, with limited growth options, you'd have to consider CBA not to be a growth stock, so most shareholders hold it for the dividends. Can I ask, to what extent did the bank consider a more direct link to dividends as part of the REM policy, rather than the indirect link, which is the relative total shareholder return? Thank you.
So the link, if you like, with dividends comes through the scorecards which determine the short-term variable remuneration, and we've enhanced the proportion of those scorecards that relate to financial measures for the 2018 year. So up to 60% of the scorecard is related to the financial measures, which again would flow through to the dividend outcome. Thank you. Do we have another question from microphone 2?
Chairman, could I once again introduce Mr. Paul Fanning?
Thank you, Katherine. And look, I'm going to be referring to the specific changes made to the remuneration effective FY18, and broadly I support the bank and the executive team for undertaking the changes. Couple of salient points. One, I definitely was present last year at the extensive vote against the Remuneration Report, and the possibility of a spill motion today, which hopefully won't happen. However, I'm wondering what stakeholders you really did consult. I wasn't made aware. I was under the impression that there was going to be fairly broad consultation done, which I thought there would have been, and obviously there was. But where did you limit the stakeholder consultation process? Was it institutional? Was it fund managers? Was it whoever else? Now, in regard to the components, yes, they look good. The deferral items like deferral vehicle and deferral period, yes, they are greatly enhanced, which is good. 50% of STVR awarded will be deferred as equity, which gives more an incentive for performance for short term. And also the deferral period being reduced from 1 year down to 2 years and broken down into 50% deferred STVR and the remaining 50% vesting after 2 years. Further down under the LTVR, page 70, the performance measures have been amended, as you have alluded to, Katherine, already, on trust and reputation, 12.5%, and 2 lots of 12.5%. Now, when you came up with these revisions, did you end up getting expert advice from an actuary? If so, who was it? And how did you then yardstick against the broader financial services market? Because, I mean, I've just been looking at page 70 and there's pages round about that. It seems like it's an exhaustive study, but I think we need a little bit more colour, a little bit more detail, because I'm one for picking eyes out of reports, and it doesn't seem to be what the new blend you come up with is excellent, but we really need to know what were the constituent parts that brought you to your decision-making process.
Okay, all right. Thank you, Mr. Fanning. In terms of the stakeholder and shareholder consultation, that was very broad with large shareholders and smaller, and remembering that many of the concerns were actually expressed at the AGM last year, so we took a record of those concerns that came from the meeting. We also obviously looked more broadly at the remuneration frameworks in the environment and looked at our sector and other sectors. And that's why we've come up with the particular changes, which we feel and we hope shareholders will respond to the concerns that shareholders had. In terms of the 2 non-financial measures, I would say that we still believe strongly that in the long-term variable remuneration there should be an element of non-financial, but element that actually relates to the long-term value creation for the bank. And that's why we chose the trust and reputation and the employee engagement. They've done very specifically for the bank, and because they have to relate to our business and what's important to our business, and particularly at this time. So it's not referencing what other people do, it's what we think is important for us to do, and for the senior executive team and the CEO to be focusing on in terms of long-term initiatives that will endure over time, not just short-term measures that produce a short-term impact. So that's the basis, and more detail on exactly how we will determine the outcomes in relation to those two measures are available on our micro website that has those specific details
Katherine,
and
just
criteria.
Be a very long-term shareholder, and I appreciate your reference to the micro website, but just perhaps you might like to enlighten the meeting today as to, obviously you had a range of views to get down to an enhanced version of remuneration, which is great, and I gather would have been an unenviable task. Did you use actuarial advice or other consultants in the end to come up with the blend that you did? And if so, what was it?
It's not actuarial advice that was particularly pertinent in this matter, but we certainly did canvass remuneration advice from remuneration consultants to understand the different structures that were, if you like, in the environment and particularly in our sector. So we had to understand what everyone else did. We took into account shareholder concerns as expressed at last year's meeting, and then follow-up, and then we made a determination about what was appropriate for the Commonwealth Bank in terms of its remuneration structure.
Okay, thank you.
Thank you. Microphone 4, please.
Chairman, may I introduce Mr. Charles Weeks, a shareholder?
Thank you. Don't you consider the base salaries of these CEOs are very exorbitant? When you consider Barack Obama, the leader of the greatest economy in the world, was on $1 million. Our Prime Minister, leading our country, is on about 500,000, and yet these CEOs are on 5 million base salaries. There was an ABC report which came to the conclusion that North America and Australia had these exorbitant salaries. Europe and other OECD countries had very modest salaries in comparison. As for the overall performance, have you ever considered inflation when you're considering the bonuses for the CEOs and executives? Thank you.
Thank you, Mr. Weeks. As I've said, we absolutely recognise the concern of shareholders and the community more broadly in relation to levels of executive pay, and we do take that into account in assessing annual remuneration increases, but we have to have reference to the remuneration frameworks in our sector, and that relates to globally, so that we can attract the highest calibre executives and CEO to our business. If we were offering very low rates of pay, we wouldn't have anyone who would be prepared to come and work for the bank, take on the challenges, and also be subject to the regulatory scrutiny that is current now and also will be coming once the BEAR legislation comes into place. These are very onerous requirements, personal requirements on the senior executives of banks, and that is actually reflected in the remuneration. But again, I recognise the concern that the community and people have in relation to the levels of remuneration. They are high.
Very high. Thank you.
Thank you. Microphone 3, please.
Chairman, may I introduce Mr. Ron Strauss, a shareholder?
Madam Chair, I'd like to go back to Mr. Jeffrey's question because I thought you were quite dismissive of his question. He asked for evidence. You gave no evidence. Basically, what are the parameters does your board use in assessing these special people with special qualities? Can you just give us some idea of the framework you use to assess the best quality of person that you put onto the board? Thank you, Madam Chair.
So, Mr Strauss, I think just in relation to executives, I think is what you're referring to rather than the board. I think, as I said, we actually reference external market benchmarks, and they are provided to us by remuneration consultants. So we have that as the reference point in determining the remuneration levels which we provide for our senior executives. So it's all done through external benchmarking. We then form a view against those benchmarks, but we then pay between the median and the 75th percentile of those benchmarks for the calibre of people that we are seeking. And obviously when we're recruiting executives and appointing them, we go through extensive due diligence on the performance and the calibre of that individual relative to the benchmarks that we're seeking to establish.
Can you just explain how you measure performance once you've employed these people?
So we have, in terms of the remuneration, we have scorecards, and those scorecards have very specific elements to them. And about 60% of those elements relate to financial outcomes, and they are very quantifiable. Then we have a further element which relates to customer service, and this year we've introduced a more rigorous measure in relation to customer service, so it's called Net Promoter Score, because previously it was relying on survey outcomes and we were coming first in those outcomes, so we felt there wasn't enough stretch left in that measure, so we've introduced Net Promoter Score. And then the balance of the scorecard relates to the achievement of specifically identified business objectives and also the leadership performance of that individual. And that leadership performance is also assessed by various aspects, including staff surveys. So we try and get the effectively independent view on that person's leadership performance as assessed through their team.
Thank you very much.
Thank you. Microphone 2.
Chairman, may I introduce Mr Laurie Bennett, a shareholder?
Yes, good morning, Chairman. We've heard a great deal about issues that are affecting the board and the senior executive this morning, but I regard the greatest asset of this company is our customers. And quite frankly, you've lost their trust. What are you doing about retaining our customers, making them feel that they're confident in dealing with you and the board, and particularly those long-term customers that have put a lot of time and effort into maintaining this company to the high standards it's had, which is sadly disappointed? I'd like an answer on that, and then I have a following question.
Okay. Thank you, Mr Bennett. Well, I'll give you a response, but then I'll also ask Ian to respond in more detail. I think, as I said in my address, and also Ian has reflected in his, the paramount point is our customers. It's the first item in our strategy, and it's the first item in all of our operations. So serving the needs of customers is crucial, as you say, and regaining their trust, because we recognise that the trust has been compromised by recent events. You would have seen the measures such as the ATM fees, the low interest credit card, the fact that we've changed the remuneration frameworks for our frontline staff to focus virtually exclusively on service and not on product performance. These are all measures that we've taken to ensure that it's seen that we do actually put our customers first, and that is actually what drives our business. But Ian,
before you do, you're very selective in your response there.
Well, I'm just trying to give a few examples.
I know that, but also put the word in long-term customers. Does the bank value clients and customers that have had a long-term business relationship with this organisation, much longer than most of you people on the board? You'll be gone and they'll still be doing business with us. What are you doing about keeping them as happy customers and people who share in the experience of being part of this bank?
Okay, so perhaps Ian, if I can...
I'd reiterate, first of all, what I said in my opening, which is long-term customer relationships are absolutely the lifeblood of the organisation. You will have heard that the overall levels of satisfaction of both long-term and short-term customers in the aggregate are at almost record highs here. However, there are two things that we need to realise. Number one is customer expectations and community expectations always are on the move. The past is no guarantee of future satisfaction, and we are thinking in particular in a very ongoing and open way in consultation with customer and community groups about making sure we find the right balance between customers and shareholders, including the way we recognise customers. I think if you have called recently, recent to an anniversary with the bank as a piece of feedback I got from one customer 2 weeks ago overseas, as she got a problem sorted out, the next comment from our frontline person sitting in a call centre in Australia was, "Thank you, I noticed that next week you'll have had 35 years with the bank," prompting her to write to me and thank me for that recognition. And finally, as I said before at the start, we do need to do a better job and are working very hard to do a better job with those aspects, those parts of our customer base we've let down. So there is a real move from just saying the overall levels are at record high, we're doing well, to that's good, but we need to keep focusing on making every individual experience as good as it can be, and part of that is acknowledging the contribution that long-standing customers have made.
I'd just like to point out that even on your figures, there was still 15% of unhappy customers. But I will ask my second question now. And you mentioned the fact that a client got in contact with you just then. Tell me, I get the impression that the board and the senior executive are firewalled from feedback from shareholders and customers. What's the mechanism to get into, to have feedback into you people? Because you say you widely consult. No one consults with me, and I've been a customer for 50 years.
So perhaps I'll comment on the shareholder side and how the board gets the feedback from shareholders, and I'll ask Ian to comment on customers. So throughout the meetings that, for example, I would hold, or David Higgins as chair of the Remuneration Committee, the meetings we might hold, we give that feedback directly to the board, and in fact the purpose of this AGM is to get the feedback from shareholders, which you're giving us, and we take that into account when we go back to our meetings, and as we did do with the changes to remuneration that we've actually presented to this meeting. And the feedback from last year's meeting was crucial in relation to those changes. In relation to customers, the board does meet customers on not a fully regular basis, but quite often, so we do get the direct customer feedback, but that comes more through Ian and the team in terms of the feedback. But Ian is constantly meeting with customers.
Well, he's not meeting with this client, and quite frankly, the only feedback you get, I suspect, is through your customer call centre. And I wonder how many of the board actually get to see those customer feedbacks and suggestions on how they could better perform and the bank could better perform.
Well, look, I'll say, first of all, your point that the executives need to be directly in touch with customers, I couldn't agree more on. If you look back on the last 50 notes that I've written each week to our staff and see how many of them say last week where I was and how much time that's been in call centres, listening to calls, meeting customers, spending time with customers, and then you go and speak to all the people in the front row after the meeting and ask them when they were last in call centres. And in fact, we've embarked on a new program going 3 levels down to make sure everybody spends time in call centres we can, because they're in Australia. And we're constantly trying to look for direct customer feedback. Clearly, with 10 million customers, we can't get to everybody, but what I will say is we're also making a point, and I've personally making a point of reading ourselves some of the most distressing and difficult letters from customers, ringing them ourselves, meeting them ourselves, and making sure we're getting that feedback face to face. So I cannot promise that the chief executive or the executive team will get round every one of millions of customers, but I can tell you it's a major priority on everybody's diaries, and there is hard evidence of that.
So thank you, Mr. Bennett.
I'm still not convinced. Thank you.
Thank you. I'll take one more question on this item. I think microphone 1.
Yeah, thank you very much. I think I was hoping that I would be able to talk to you, and I sincerely believe that what you're saying is true. I've tried to meet you before, but I couldn't. So I hope I can meet you before I leave, please.
Right, okay. Thank you. Well, after the meeting, there'll be an opportunity to meet with the directors and the senior executives. All right. So I'll now put the resolution to the meeting. So on the screen are details of the direct and proxy votes received in relation to the resolution. So please mark your voting card in relation to item 3, the adoption of the Remuneration Report. So moving to item 4, which is a contingent resolution. I think you would have seen from the votes that have just been up on the screen that the bank has not received a second strike on its remuneration report, and as a result, it is not necessary to put the conditional spill resolution to the meeting. So that takes us to item 5, which is a resolution to amend the bank's constitution as proposed by a group of shareholders organised by Market Forces. The resolution proposes inserting a new provision into the Constitution which would require that in the exercise of their powers and duties, the directors will ensure that the business of the company is managed in a manner consistent with the objective of holding global warming to below 2 degrees Celsius above pre-industrial levels. Item 5 is a special resolution and it will only be passed if at least 75% of the votes cast are cast in its favour. Since receiving the proposed resolution, we have met with representatives of Market Forces to discuss their concerns and to understand their expectations of the role of the bank in light of climate change. As I said in my address, climate change represents both a risk and responsibility for the bank. Addressing the risk of climate change is core to our business strategy, and as we have set out in our annual report, climate change is a risk that could impact on our ability to serve our customers or to deliver on our strategy. Our responsibilities flowing from climate change are reflected in the Climate Policy Position Statement, which we released in August. This sets out our commitments to playing our part in contributing to the Paris Agreement objective of limiting climate change to well below 2 degrees and supporting the responsible global transition to net zero emissions by 2050. I would like to emphasise that this statement is expected to evolve. We are currently undertaking a climate scenario analysis which will be completed next year and will then be used to update the Climate Policy Position Statement. While our commitments will evolve against the backdrop of domestic and global policy settings, you will find that we have already made a number of commitments relating to our own emissions and in support of responsible global transition. For example, we have committed to procuring 25% of our own power needs via renewable energy by 2020, supporting low-carbon projects such as wind, hydro and solar projects with a target of 15 billion by 2025, and also adopting the transparency and reporting recommendations of the Task Force on Climate-Related Financial Disclosures. We engage with a broad range of stakeholders and we acknowledge the concerns some have raised regarding the role banks play in supporting the fossil fuel industry and particularly the coal industry. And as I mentioned in my address, shareholders should note that our coal funding is comparatively small and has been trending down for some time, and we expect that trend to continue over time as we help finance the transition to a low-carbon economy. Importantly, all our significant lending decisions have the highest standard of ESG governance applied to them as a threshold test, and we only consider other lending criteria if we are satisfied the ESG standards have been met. Your board respects the rights of shareholders to seek amendment to the bank's constitution, but does not consider the requisitioned resolution to be in shareholders' best interests. The directors have an overriding fiduciary responsibility to the company and do not believe that it's appropriate to single out one issue above others as requiring specific and special consideration by the board. The board will, however, continue to take an active role in evolving the bank's climate position. I would now like to give Mr. Julian Vincent from Market Forces an opportunity to make some brief comments. Microphone 1.
Thanks very much, Chair. Before I start, I'd also like to thank my fellow shareholders in this room who've raised a number of concerns, specifically around the AUSTRAC affair, and which I wholeheartedly support. So thank you. And thank you for the opportunity to speak in favour of this resolution. I also want to thank the more than 140 shareholders that proposed it, and the shareholders and institutional investors that have taken the opportunity to engage with our company as a result. The resolution is proposed to ensure the company is adequately prepared to manage an issue that will dominate the global economy for centuries to come. It's proposed with an environmental and moral outcome in mind, but is grounded in the interests of financial and economic stability. The Governor of the Bank of England and Chair of the Financial Stability Board, Mark Carney, has warned climate change will be an issue that defines financial stability, and once this occurs, it may be too late to manage. APRA's Executive Board member, Jeff Summerhays, warns that climate change risk may have system-wide implications. Commonwealth Bank is by a country mile the largest company in Australia, 8% of the ASX 200. It can be regarded as a proxy for Australia's economy and financial system, not just because of its size, but its exposure to every other sector in Australia. Where there exists climate risk in the Australian economy, Commonwealth Bank is exposed to it. For the board to get the management of this issue wrong will not just be failing your shareholders, but all those who depend on a stable economy and financial system. Moreover, it'll be failing all those who have a stake in a stable climate. Since 2015, when Commonwealth Bank first supported the goal, subsequently agreed to in Paris, of holding global warming below 2 degrees, the policies, statements and actions coming from the bank have failed to even approach that standard. And Chair, your comments regarding the bank's declining support for coal and continuing to exit the sector are very welcome, but this resolution is not just about coal. A bank serious about managing climate risk does not commit to support the Paris goals and then proceed to lend another $6 billion to the fossil fuel sector, more than 4 times its support for renewable energy. It does not finance projects that dramatically expand the scale of the oil and gas industry, making the challenge of avoiding runaway climate change all the more difficult. But this resolution is not just about fossil fuels and renewable energy. A bank serious about climate risk actually considers climate impacts such as sea level rise and its impacts on the property market we're heavily exposed to, something which our CEO told the House of Representatives earlier this year that Commonwealth Bank was not doing. A bank serious about climate risk doesn't get taken to court about failing to manage it as a material business risk, as was the case earlier this year. I could go on, but hopefully the causes for concern are clear enough. Put simply, this resolution would have ensured that this company's board has the capability, mandate and direction to manage climate risk, something which we thought would have been welcome. Instead, the board has chosen to oppose this resolution and recommend shareholders do the same. As a result, we're likely about to see a missed opportunity to ensure our company is equipped to manage a defining issue for financial stability. And I hope it's something we will not all later come to regret.
Okay.
Thanks.
Thank you, Mr. Vincent. Again, I would just reinforce the point that in recommending that shareholders vote against this resolution, that should not be taken to indicate that we don't regard climate change and its risk as a very important matter in relation to the bank and also in relation to our social responsibility. And I think we've tried to make that clear in our climate policy position statement, which we will evolve as our scenario analysis is finalised next year. So can I go to microphone 1?
Chairman, may I reintroduce Ms. Mary Ansich, a shareholder?
Thank you very much, and I must apologise a little bit. I was intending to ask this in the last issue, but the girls assured me I can ask it anyway. It's still in relation to AUSTRAC, and you appear to be quite confident that there are no bank staff that have been involved in wrongdoing. To me personally, it beggars belief that the board did not know about the coding error until August 2015, but the laundering syndicates appeared to know about it in 2012. Why are you so confident that there was no wrongdoing on the part of staff?
So thank you, Ms Ansich. We have, as part of the work that the board committee has been doing, and we've done extensive review and spoken to an enormous number of people throughout the bank. We have not come across any evidence that there was malfeasance on the part of any employee. So I can only just reinforce that we're doing our diligence to get to the root cause of this, and there is no evidence whatsoever of wrongdoing on the part of bank employees.
Thank you.
Thank you. Microphone 4.
Chairman, may I introduce Ms. Rowan Weir, a shareholder?
Hello, Chairman. My name is Rowan Weir, and this is just a comment on the call centres. This is terrible. On the call centres, I'm amazed at how much you rely on them, because the surveys from them don't fit any of the problems that they have. They usually ask you, are you satisfied with the person? And you know damn well if you give them anything less than 9, they'll be sacked. I give the robot 10, so I just cannot imagine. And the questions don't even match your problem. They just take you nowhere, and you cannot get to any other higher level. You're just stuck with a person who doesn't have the position or the contacts to get you higher. And it just astounds me to sit here and hear that you're forever referring to your call centres, because you know how important that job is to the person that you're speaking to, and you rate them highly.
Well,
even though they haven't solved your problem or anything.
Well, thank you, Ms. Weir. Why don't I take you to the highest level and ask our Chief Executive to respond?
Look, I do. We've spoken a bit about call centres for a couple of reasons. I could say the same about our wonderful people in our branch network, in the business banking centres and everywhere we're touching customers. We spend a lot of time with them. We do rely on some degree of quantitative surveying because we want to know what's on the minds of customers, but we make sure that the feedback we receive from those sorts of surveys is compared against qualitative feedback and feedback from all sorts of other sources. So we do feel that we've got a pretty good handle on it. One thing I can certainly tell you is that we think we've got wonderful people serving our customers. And so when we hear that our customers are having positive experiences with people, and we see when we all walk around the sorts of people who are doing the work, we're not surprised. And to the point that the Chairman made before, talking about policies and processes, one of our key jobs is to make sure we're listening to them carefully and doing whatever we can to help them do what they come to the bank to do every day and love doing, which is spend time in helping customers.
Thank you, Ms. Weir. It's microphone 2.
Chairman, may I introduce Mr. Robert McLaughlin, a shareholder?
Thank you. My question is to Katherine. I'm a lifelong business customer of our company and a resident of Bulga, an historic village in the Hunter Valley threatened by the expansion of the Mount Thorley Warkworth open-cut coal mine. The Singleton local government area has the highest rate of child asthma in New South Wales, and open-cut coal mining and coal burning is the biggest contributor to fine particulate pollution and, of course, the biggest contributor to climate change as well. My question relates to our company directors' fiduciary duty to manage climate-related risks. Given that APRA Executive Director Jeff Summerhays has already made clear that climate risk management is a legal obligation for directors, why would our company be opposed to amending our constitution to make that clear?
Thank you, Mr. McLaughlin. I think, as we've said, number one, we regard climate change, the risk and responsibility, as extremely important, which is why we have our climate policy position statement, and that is a policy that's actually endorsed by the board. So it comes with that credential.
It doesn't go nearly far enough. It really does not.
We understand that we will evolve that statement, and that's why we're undertaking the scenario analysis, and we'll have those results next year, and we'll evolve our statement at that time. But our commitment is to a responsible transition of the economy to a net zero emissions by 2050. The resolution before the meeting, the reason we are not in favour of it is that it takes one particular aspect of directors' duties and puts it in the Constitution, where we have a broad range of fiduciary responsibilities, and we regard those as best left in terms of the management of the board and its process, rather than identifying all of those individual responsibilities in the Constitution. Is there another question from microphone 2?
Chairman, may I introduce Mr. Andrew Fraser, a shareholder?
My question's directed to Ian Narev, and you'll see why when I ask the question. Last week, the ANZ CEO, Shane Elliott, said that the ANZ would scrutinise the strategies of its customers to withstand and reduce climate risk. Does the CBA have similar plans to subject the climate change resilience strategies of its customers to sharper scrutiny? If so, what are they?
So, Mr. Fraser, as I've said, we have what we refer to as our ESG tool, which is Environmental, Social and Governance tool, and all lending is put through the ESG framework, which actually includes consideration of the extent to which our clients are addressing climate change and as it relates to their business and the lending proposition in front of the bank. So we are actually looking at that in relation to our clients, because if they're not, then that represents a risk to the bank.
Well, will you make a stronger statement to follow the lead of the very strong initiative of Shane Elliott, the CEO of ANZ? Why can't you do that?
Well, I hope that in our corporate responsibility report we've tried to make that clear in terms of our approach to lending and the application of the ESG tool. But let me have a look at that, and we'll see if we can effectively make that clearer when we do our report next year.
At the very least, it puts you at a competitive disadvantage, and the shareholders might be interested in that.
Yeah. Thank you very much, Mr. Fraser. Microphone 1.
Chairman, may I introduce Ms. Nicole Wedgwood, a shareholder?
Good afternoon. I'm a proxy for Lorraine Bull. My question is, in November next year, over $1 billion of debt finance to the Adani Abbott Point coal export terminal is due to be refinanced, with CBA currently being the most exposed bank to this deal. Abbott Point is fundamental to Adani's plans for opening up the Galilee coal basin, a project that would create an array of environmental, social and economic issues, not least of which is the potential addition of billions of tonnes more greenhouse gases to the atmosphere. Continuing to finance Abbott Point would be assisting Adani to develop their Carmichael megamine. Will Commonwealth Bank exit its support for the Abbott Point coal export terminal next year?
Thank you, Ms. Wedgwood. We don't normally comment on individual clients, but we have in this instance made a public statement that we have not been approached and will not be approached to provide funding in relation to the Carmichael mine. So we've been very clear in that position. Thank you. Thank you. Is there another question from microphone 1?
Chairman, may I introduce Ms. Joanna Richardson, a shareholder?
Thank you all
Please excuse my nervousness. My questions arise from the documents I received in relation to this meeting and the little scorecard that was handed out at the front. So maybe I need to stand back a bit. I've got three short questions. One of them sort of a throwaway one. Why do you emphasise the lack of power and influence of retail shareholders by saying that this proposal is coming from 0.077%? That's just a throwaway, but it did make me feel twitchy and, you know, sort of raises question of, well, how do I sleep at night? Has the board considered how the Constitution could be changed to remove the directors' objections and meet the intention of the people proposing the resolution? This was in relation to energy efficient buildings, which you support, and the idea that the climate change thing also goes to advocacy. I'm from Victoria, where there's an awful lot of new houses being built with black tile roofs that look to me to be woefully not energy efficient. Could the bank advocate for better housing standards for all of the people that wind up with quite large mortgages over houses that are going to cost them a lot to heat and cool for the life of the house unless they do an awful lot of extra work to improve the situation?
Thank you very much, Mr. Richardson. Just in relation to your first comment, the calculation in relation to the number of shareholders who are proposing the resolution was not intended to be disrespectful to the right of shareholders to propose shareholder resolutions, so I apologise for that. In terms of varying the Constitution to effectively be the resolution to actually enable the Constitution to be amended, actually we think it's much more effective if we have very specific policies that address particular issues, and in this case having a very clear policy on climate change actually makes it more transparent to shareholders to see the policies that we have rather than something that's embedded in the Constitution and from that point becomes somewhat invisible. So it's what we do in terms of our policies that actually matters. In relation to building standards, yes, I mean standards, the actual standards are actually becoming more rigorous in terms of energy efficiency, but I'm not sure that we take those that we can take those into account specifically in our lending other than in our own properties.
Look, I think as the Chairman says, we're obviously very focused on building standards in what we're in. You raise an additional point which is very interesting, which is can we just help make, given the presence that we have in this market, can we help make people aware of what energy efficiency is? Which I think is a very good question. So we should have a think about that. And you might, Matt Common, our head of retail, who's in the front row, he will be outside afterwards, and it may be worthwhile you having a chat with him and hearing a bit about what we're doing and what we could be doing, because the opportunity to just raise awareness through the business that we're doing on some of these issues is a real one, and we're always open to ideas about how we can do that.
Right, do we have another question from microphone 1?
Chairman, may I reintroduce Mr. Colin Fulton, a shareholder?
Thank you, Madam Chair. My question relates to professional indemnity insurance of the board. What's the sum insured, level of cover of that professional indemnity insurance? Number 2, will this insurance cover future damage claims against the directors related to their decisions that turned out to be adverse to climate stability? 3, will the level of cover be sufficient given the past history of litigation against the asbestos and tobacco industries?
Thank you, Mr. Fulton. We don't comment on the specifics of our insurance cover, other than to say that we have the level of rigorous insurance frameworks that shareholders would expect that we have, but we don't go into the specifics of the cover that we actually have on foot. Microphone 2.
Chairman, reintroducing Mr. Philip Galvin.
Just a point of interest for shareholders, the Market Forces company that's actually brought this proposition to the meeting, they're actually an activist group. They have a stated goal on the website of the complete destruction of all coal, oil and gas activities in Australia, which I think is probably something that we shouldn't be considering in that context. But what I'd really like to say is that it's going to be a little bit countercultural to everything that you've heard so far. To date, all the climate models and all the climate predictions have been 100% wrong. There we go. Just consider, atmospheric temperatures haven't changed for 15 years. Sea levels are not rising or falling. Extreme weather events are no more, haven't occurred with any greater frequency than they have in the past. Arctic and Antarctic ice levels have ebbed and flowed based on historical limits. But there has been real damage done to the Australian people as a result of this climate change mantra.
So, Mr. Kelvin, I think
No.
You have made your points to the
No,
meeting.
I haven't.
No, you have over
The
your previous comments.
No, the resultant focus on renewables, has left the national grid with frequency and voltage unreliability. You've heard about energy prices going through the roof. You've heard about energy poverty.
Mr. Kelvin,
100,000 households in South Australia every month
I think
are accessing the food bank.
Mr. Kelvin, can I ask you to sit down, please? I think you've made your point to the meeting.
I'd like one
so
more
could you
point.
please sit down? I think if you don't sit down, we'll turn off the microphone. So could you please sit down? Okay, thank you. All right. Are there any further questions? So, question from microphone 1.
Chairman, may I introduce Mr. Daniel Gosha, a shareholder?
Good afternoon. Wow, how do I follow up that? Just worth pointing out that I think the largest company in Australia deserves the longest annual general meeting, but my question relates to Colonial First State Global Asset Management. So this is a company wholly owned by Commonwealth Bank that is responsible for over $220 billion. I'm keen to understand how CFS GAM can manage their investments in line with 2 degrees, and are they insisting that the companies in which they're invested report in accordance with the TCFD? And if they don't, what action will be taken against those companies?
Thank you. So the CFS GAM they follow the principles of responsible investing and do take these matters into account. In terms of the TSFD, that's an emerging framework, and as you know, we have said we will adopt it at the group level, and then that will flow through to our subsidiaries as well, and no doubt through CFS GAM in terms of their investments. I would expect that it's a framework that's going to become prevalent very soon. I mean, it's going to be very rapid.
Okay, I have one quick follow-up which doesn't relate to disclosure, but it's along a similar line. CFS GAM owns or has significant shareholdings in a number of companies that are looking to expand coal-fired power in Southeast Asia, including companies from Japan, Korea and India. What is CFS GAM doing about those companies?
As I've said, they follow the principles of responsible investing and will effectively have the similar ESG frameworks that we have at the bank level.
So, just to be clear, if it's legal, it's okay?
No, that's not what I said.
Okay.
I said we follow responsible investing principles.
Great, thanks.
Thank you. Microphone 2.
Chairman, reintroducing Mr. Rodney Jeffrey.
Mr. Chairperson, the document we would have all received notice of 2017 annual general meeting. Within it on page 13 says Chairman's voting intentions, and it says the Chairman of the AGM intends to vote all available proxies in favour of items 2 and 3 and against items 4 and 5. Now, my question relates to item 4. You are voting against a conditional spill resolution. I understand that that isn't required because there hasn't been a 25% vote against at this meeting. But I find it very, very troublesome that a board would sit out there and say it is in the interest of shareholders. You and Mr. Narev have talked about your first priority, and we think of the shareholders, we think of the customers, and yet you are prepared to say that if you have 2 votes against you in excess of 25%, you then don't believe there should be a spill. Now, that idea of a spill surely came through ASIC and consideration of very competent people. Can you give me any reason why the board should adopt that policy? How can you put your hand on your heart and say that? How can any member of the board out there say that? And can you let me know what proportion of the board, whether it was unanimous or just a majority, voted for this insidious statement to us shareholders? You slap us in the face and say you will not accept a spill, if need be.
Thank you, Mr. Jeffrey. Well, the board considered this resolution and determined that it would not be in the best interest of shareholders to have a spill, because as a result of a spill, it would be likely that very few of the directors, if any, would renominate, and so the shareholders would be left without a board. And that we regarded as not in the best interest of shareholders. Thank you.
Well, can you advise how many shareholders said they wouldn't stand again under that circumstance? It's not really answering the question. Not satisfactory to me, I don't believe.
Well, I'm sorry, Mr. Jeffrey, but that is actually the answer to the question, that it was, in our view, most likely that if we had had a spill, individual directors would form the view that they would not stand, and certainly I would not have stood for re-election after a spill motion, and therefore the shareholders would have been left without a board. And for one of Australia's largest companies and Australia's largest bank to be left without a board, we didn't consider was in the best interest of shareholders.
No, I cannot accept that as a reasonable approach to shareholders.
All right, I'll take one more question on this resolution. Microphone 1.
Chairman, may I introduce Ms Annie Whale, a shareholder?
Good afternoon. Several years ago, Commonwealth Bank said it had an unlimited appetite for lending to renewable energy. Now that all 4 major banks have put out targets for investing in low carbon projects, why is it that ours is the weakest of all 4, at 1.8 billion per year to 2025, less than NAB, which is a company nearly half our size?
Sorry as well. So our target for lending to renewable energy by 2025 is 15 billion, and currently we have 2.9 billion in lending to renewable energy businesses. Is that? Have I misunderstood?
I see that NAB stands at 20 billion, so I would imagine Commonwealth Bank, at being a much larger company, would be have a greater figure.
So in terms of our climate policy position statement, we've targeted 15 billion. If the climate scenario analysis, that the work that's being done, and when we get those results, if that suggests that that number can be higher, then we actually will increase it as part of our evolution of the policy statement. But that's the number that we felt confident in targeting in the first instance.
Okay, thank you very much.
Thank you. All right, well, I will now put the resolution to the meeting. And the details of the direct and proxy votes received in relation to item 5 are displayed on the screen. And I now ask you to mark your voting card in relation to item 5, which is the resolution to amend the Constitution. That now concludes discussion on all the items on today's agenda. Please complete your pink voting card and place it in one of the ballot boxes that representatives of Link Market Services are now holding and that are near the exits. If you need any assistance with completing your card, representatives of Link are available in the room to assist you. If you're a shareholder and a proxy holder, it's important that you complete 2 pink voting cards, one in your own right and second as proxy. And as previously mentioned, the results of the poll will be released on the ASX and on the bank's website later today. I declare that the poll will close 15 minutes after the meeting itself closes. Can I thank you all very much for your attendance today, and my fellow directors and members of the senior team from the bank invite you to join us for a light lunch outside. I now declare the meeting closed. Thank you.